we're going live now.
We're
So
coming in red hot right now.
yeah, if you have anything to say about JPOW, now is the time to do so. I think we are live. What's up, everybody? There's 19 people here already. That's crazy to me. I know Tanner's one of them. He's watching this because, like us, he has nothing else going on at 9 p.m. on a Wednesday. I got to do one of those like crazy emit openings where I'm over the top. What's up, everybody? I can't do it. I'm here with Steven Fiorello. He is a regular contributor on Seeking Alpha. We were just sharing our very honest thoughts about the Fed raising rates today behind the scenes. And Steven just wrote a really, really great article on SoFi. And we've had SoFi news today as well. So we're going to talk all about that. Steven, yeah, I'm glad that you're on tonight. Where do you want to start?
Let's go right into SoFi.
You want to
My
start with
article
SoFi?
was a couple of days too soon. I may
Yeah.
have to do another one now.
So I'm going to post that article actually in the comments, and I'm going to pin that so that people have a link. I don't have a Seeking Alpha link, so I can't promote. I know Tanner's probably
you're
rolling his
not,
eyes.
Up with the times like Tanner at the end of the
No,
day.
I'm not. Look at him. He says, "Did you say Seeking Alpha in the comments?" No, I don't have one of those. I'm not going to be promoting one of those. But if you do have a membership, then definitely go check out this article by Steven. You brought up a couple of interesting points in the article. A lot of them was news that were recent: the APY raised for savings account, the Noto buying shares, student loan forgiveness, the whole SVB situation. I wonder if we can just talk about just your article and the thesis for a blowout Q1, or at least SoFi gaining some of these depositors in Q1 as a result of what's going on in the macro.
Yeah, sure. And look, just because SoFi is a company I am very bullish on, I am down money.
Yeah.
Do not follow me into this unless you have money to burn, because I have no idea what's going to happen. I think it's going to be a great company, and I do a lot of due diligence on every investment I make, and it fits within my pain threshold. So I keep dollar cost averaging into it, and this could be a very interesting Q1. By now, if you haven't seen what's going on with Silicon Valley Bank and the rest of these other ones, you probably don't watch CNBC, Bloomberg, or any of these channels. It's all over the news.
Yeah.
SoFi increased their savings deposit to 4% if you do direct deposit with them, and their checking is 1.2%. That is by far the highest that I have seen in the banking industry on the savings. I mean, it's pretty close to what you get on a 1-year duration CD. And my thesis is when all the banks report Q1 earnings and you see the deposits on the balance sheets, we're going to get a nice surprise with the deposits from SoFi. And Anthony Noto, in his recent fireside chat, pretty much confirmed that.
I actually tweeted about this.
Okay.
SoFi put this up alongside some people were arguing that they were cherry picking some of these banks, but yeah, I don't think they have to
really
cherry pick too much. Yeah.
How is this cherry picking? You got Wells, you got Bank of America, you got JP Morgan Chase, Citi, Capital One, and Ally the Neo Bank. I mean,
yep.
They're not cherry picking anything. They gave you two that were 3.6 and 3.4 APY on savings.
Yep. And they had to lower APY on checking so that they could increase APY on savings, which I think, personally is a good move. Yeah, exactly. It incentivizes that long-term hold, which is even better for SoFi in the long term, right? So,
yeah, and you can make an argument that at 4% APY, look, my wife and I, we put money into a CD not too long ago, and right. I did a 3-month duration because the APY was pretty high. This is an argument not to do a 3-month or a 6-month CD and just put it in savings with SoFi at 4%. You don't even have to lock it up. There's no commitment that I am aware of that you can't touch the money for a certain amount of time.
Right. And the interesting part, Stephen, that I wanted to double tap on was that it seems as though SoFi is doing everything that they possibly can to Sorry.
What are you laughing at?
Just the chat, man. I need to turn this off. I'm so
Yeah,
susceptible to
I
the
can't
chat.
read the chat during this because it
Yeah,
gets
I got to turn, and it's not even just viewers; it's the other guys on the SoFi Weekly Pod that just go on and just try to sabotage the one time in my life that I go live. But anyways, it seems as I'm trying to keep my cool here. It seems as though SoFi is trying to do everything that they possibly can to, number one, share this feeling of security that, hey, we are not like SVB. We want to distance ourselves as much as possible. And then number two, to put themselves in pole position to win some of that money that is leaving these banks. Because, you know, the savings API was one thing. Noto buying, I mentioned it in the last SoFi Weekly podcast, that just the natural, logic dictates that I think that deposits are going to come in very strong as a result of the situation. And as a result of that, Noto is buying because, he's bullish on this now tailwind that is happening. And then in addition to that, like the whole FDIC thing that they released today, which I mean, we're going to get into, but everything that they've been releasing from a blog perspective, from their support on Twitter, from Anthony Noto signaling, bullish signals, buying shares, to the 4% savings APY, it seems to all be catered towards this, fostering this feeling of, number one, security, and number two, we want to capture as much of that money as possible.
If you look at this as pick a sport, football, basketball, baseball, hockey, doesn't matter. You pick two players and you line up their statistics.
Right.
And you don't tell anybody the names, and you just make a column without the players' names, but you put the line items there. Interest, you put the FDIC insurance, all the features. It's hard to dismiss what SoFi is doing, and I think you hit the nail on the head. They increased the FDIC. The way that I read it, I didn't look too deeply into it, but it seems like there's a fee for the 250 to 2 mil. I have no idea. It's just the way it seemed when I read it quickly. I need to do some more reading on it, but the fact that they are going to provide FDIC up to 2 million, the fact that they're doing 4% on savings, they're making a compelling case. We are here to stay. We want your deposits. Your deposits are safe with us, and we are going to do things that the traditional banks are not going to do. And they're able to because they don't have the overhead. Go walk through Midtown New York City. Go walk into any of these branches. The footprint is huge. The overhead is huge. SoFi doesn't have that overhead.
Right. And so you bring up a couple of interesting points, but to me, it's just what they're signaling, what is reading between the lines, what is that signal through the noise is we're in a power position here, or at least that's the perception that they want to give off, that we can make these ballsy moves because we want to take advantage of the weakness in the market. We are not among the smaller players that are comprising that weakness. So let's jump into the FDIC news because I think it's pretty fresh. I mean, the news today was, number one, the Fed raising rates, which I know behind the scenes we had an opinion on that. We can even touch on it in later on towards this pod. And then SoFi having the FDIC. I want to also circle back to yesterday where Noto had a fireside chat with a VP at, I think it was Bank of America. I have the transcript up here, so we can circle back there. But let's pull this up right now. So let me make sure I get the right window. Okay. So I know somebody in the comments wanted the article. I'll post this in the chat right after. But this is on SoFi's investor page under their news section. Came out today, as you can see. SoFi checking and savings to offer access up to $2 million in FDIC insurance. Now, why is this number significant? Well, it's because the majority of these banks, well, SVB and others, they got hit because of how uninsured they were. Where I think SVB had like 97% of their funds as uninsured because the FDIC insurance went all the way up to $250,000, but the vast majority of the funds were in excess of that. And so SoFi is now increasing it, the insurance on their funds from the standard $250,000 per account, which is industry standard, which is what other competitors have. They're now announcing that their deposits are going to be insured, FDIC insured up to $2 million. Now, this is going to be done through an additional insurance with what they're calling the SoFi FDIC Insurance Network, which is a partnership with multiple banks designed to provide the best benefits for SoFi members. Everybody's going to be eligible, but you have to basically opt into this, is how I read it. Existing members will be notified via email when they become eligible. Anthony Noto highlighted that it is our goal to help people get money right, which is, the company's entire mantra, which goes hand in hand with feeling good about the safety of their funds. By offering access to up to $2 million in FDIC insurance, we're making sure our members have peace of mind about their money at SoFi. We know the last few weeks, and this is the call out, have been unnerving for many consumers, and we hope this helps. We will keep pushing to drive innovation to better meet our members' needs and ensure they have complete trust in us. So, Stephen, I'll drop it there and get your thoughts on just this in general.
There is no reason for anybody to think this is bearish.
Mm-hmm.
This is strong, and while 250,000 may not be applicable to many people, to the people that it is applicable to, this is peace of mind. And with deposits floating around, banks changing, this may entice people to come over. And that's what we want. And it's sending a very strong message that SoFi is a viable company, there's a strong company, and they're not going anywhere. And I think that they're setting the standard, and other banks are going to have to follow with this. You're not just going to see SoFi do this.
So that's what I wanted to talk about as well. Like, how can they potentially do this, right? Because I just want to highlight this sentence here. The SoFi FDIC Insurance Network is a network of partner banks that allows SoFi to offer additional insurance seamlessly. So it seems as though they have many partners, and so presumably would other banks be offering this as well in that partner network?
I don't know. I'd like to see more literature on it from SoFi. Anything I would say is pure speculation. And from a purely speculative, do not hold me to this. I have no freaking clue. Noto doesn't consult me. I would think that the most logical way would be to get 5 or 10 banks, or however many banks, in a network. And then if somebody happens to deposit 2 million, chop it up, throw it around so FDIC covers the entire nut. Who knows if that's how it's going to be done or not? I have no clue. But I would like to see more about this in the Q1 report, or as a dedicated news release to get the ins and outs of it.
Yeah. So Robert just commented, I heard this was a 12 bank rotation.
It would make sense.
So yeah, obviously there's more banks in that partner network, and they're all going to be working together. So, I mean, the next logical step for me would be that all of the partner banks would increase their own FDIC insurance. It wouldn't be SoFi having this as a unique value proposition from a security perspective of their funds.
You want to play conspiracy theory?
Yeah, no, that's my favorite game.
Conspiracy theory. Anthony Noto gets those 12 rotating banks to put their banking platform on Technisys, Cyberbank, make everything seamless and easy.
What would be the selling point there? Like, what would be, why would they do that?
Well, if they're going to go in it together, just from a business standpoint, wouldn't it make sense to have everything linked in the back end seamlessly? If they're all on the same network and you have SoFi being the engineering team that's building it, you would think that they would be able to build this out better than 12 independent companies trying to figure it out. But that's just a conspiracy theory.
Yeah. And I mean, look, I think that where the tech platform is concerned, I mean, we talked about this on the SoFi Weekly podcast, like the names that we get from a public perspective, we know that they don't necessarily match up to a lot of the numbers that SoFi is putting up for the tech platform. And so the question is, who are these players that prefer to remain unnamed? Obviously, there's a reason for that, whether it's some type of regulation or whether it's some type of regulation based on the industry that they play in, or whether it's just their own personal preference that they don't want to be named for whatever reason. But I think that, Technisys could already be servicing a lot of major players, just given the numbers that they're posting publicly versus the logos that they're posting. Something doesn't really add up there.
Yeah, it could be.
So Anthony Noto highlighted here. I have the transcript from the Bank of America chat. For context, this was the Bank of America's 2023 Electronic Payments Symposium, and Anthony Noto was in the fireside chat with VP at Bank of America, where he talked about everything from student loans, which I mean we can get to if you want, to the APY and to the deposit growth and how they're winning more customers. I just want to share this little segment here in the transcript and just read it out and get your thoughts, because it sort of ties into what we've been talking about on the FDIC insurance. He said, as we reported in Q4, we have 7.3 billion in deposits at the end of the year, and over 90% of our deposits are insured. Others were in the single digits or low double digits. So 90% of our deposits are insured, and 80% of our retail deposits are really sticky as they come from direct deposit accounts. And I'm going to pull up another chart here that I'm going to show you. But first, I just wanted to get your thoughts on that.
I mean, I think that's pretty normal for him to say, because you got to think that with the member base that SoFi has attracted, it is predominantly individuals. So I don't find that 90% being anything out of the ordinary.
So, well, I mean, not out of the ordinary of what Anthony Noto would presumably say, but definitely what we've been seeing with a lot of these banks that have been coming down in terms of what they have in insured funds. This was a chart that Vadim shared. Initially, Michael Burry shared this chart, and Vadim just added SoFi to it. And the interesting part here is how far SoFi is on this chart. The chart is unrealized losses versus deposits above $250,000 as a percentage of total deposits. So again, we're talking about this FDIC insurance. We're talking about how secure some of these funds are. And you can see that all of these banks here with SIVB, SBNY, which is Signature Bank of New York, and a couple of these others that are in trouble, First Republic, a lot of them have high percentage of their total deposits being over 250,000. And as we mentioned, this 250,000 is industry standard, and it's also the reason why the majority of these funds are not necessarily FDIC insured. Like I said before, Silicon Valley Bank had an estimated 97% that were uninsured. Meanwhile, you have SoFi on this chart completely at the very bottom. They're not seeing unrealized losses. And back to Noto's comment here, which I thought was interesting, 90% of the deposits are insured. And even despite this, despite the deposits being under 250,000, they still went along and increased that up to 2 million.
Yeah, it's a good move, because for the 10% or 9.5%, whatever it is, it'll now have the additional 1.75 mil of insurance, and it's going to attract people. People are probably moving money around, and if they're probably moving money around, they're looking at options. It would make sense that SoFi is a beneficiary of this. But what I thought was more important was 2 paragraphs down. Can you bring that back up real quick?
Yep.
So he said, we expect our absolute increase in deposit dollars to be equal to or greater than the levels we've seen in the last few quarters. For those that aren't familiar, in Q4, our deposits grew by 2.3 billion in absolute dollars, and in Q3 also by 2.3 billion. So if he's saying month and a half before earnings that they expect absolute increase in deposit dollars to be equal to or greater, you got to think we're closing in on 10 billion this quarter. Whether we breach 10 billion or not, we're closing in on it for deposits.
Yeah, so I think a 32% sequential deposit growth would at a minimum be around 9.6 billion. So
yeah,
that's
SoFi finished Q4 at 7.34 billion. So, we're going to be right in there.
I think he also mentioned something around, let me see if I can find it. he talked about the quality of deposits. So he said the absolute growth in deposits remains positive at or above where we've been in the last 2 quarters, and the quality of those deposits as well. So it's not like they're expanding their deposits, but they're getting sort of lower quality customers. They're actually getting a similar high quality customer while increasing or having the same volume of deposits as well. And that's fantastic, but it's even more fantastic when you consider the macro and you have all of these banks sort of, blowing up, let's say, for lack of a better term, left and right. Okay. Anything else to add there? Let's see the comments. I think they're just chatting with themselves. No more trying to make me laugh, which is good. So I can actually run this thing. So back to your article, Stephen. We talked a little bit about SVB signature and how those deposits have to go somewhere. Let me pull this down. We also talked a little bit about the APY raises. Other things, to talk about were, of course, Noto buying shares. I mean, he bought $1 million a couple of weeks ago, and then even more recently.
We should only refer to him as Captain Noto.
Captain Noto.
Because he's leading the ship right now with buying shares. This guy's a machine.
Yeah, and you actually referred to him as Captain Noto in
I'm trying to get that to trend now.
Yeah, exactly. So here's just a little bit. I think you had this chart.
Yeah, the green chart shows
I'll
all
pull
his
that
buys since August 2021.
So I'll pull that up right now. And, I think we can see a trend. You don't see any red lines here. You just see since August of 2021 and all the way to March 16th of 2023, Captain Noto has just been purchasing shares all the way down from $14 to the $5 range. He picked up some at the bottom at $4, a huge buy, actually over 1 million shares. But yeah, $1 million, and then go ahead.
He is super wealthy. He made a lot of money at Goldman. He made a lot of money off of Twitter when Elon bought Twitter because of all the shares that he had from when he was the CFO there. So yes, I've seen bears state that on the articles that the money doesn't matter to him. He's just doing to it for optics. Look, I don't care if you've made $500 million, $12.5 million. It's real money.
Right.
You're not just going to put $12.5 million into a bad investment.
Yeah, and if you think about it from a concentration perspective as well, he already has so much skin in the game with the tranches that have to be
with the RSUs.
Exactly, right? So SoFi has to hit, I think by 2026, they have to hit $25, $35, or $45 for Noto to even unlock some of his stock options because they're restricted. So he already has significant skin in the game. And then he's just on top of that purchasing in the open market. Even if you have, let's say, I don't know, $100 million and you want to buy $1 million worth of stock, you don't look at that as, oh, he has 100 million, he's going to buy $1 million. You look at that as he's buying 1% of his net worth or of his total portfolio value, right? Like if I had $100,000 and I'm buying $1,000 here, $1,000 there, that's 1%. So that's the same thing for him. If viewed as a percentage, the concentration is absolutely insane and even more bullish.
It doesn't matter if your net worth is 50 grand, 100 grand, $1 million, 100 million. It doesn't matter. 1% of your net worth is 1% of your net worth. And nobody makes an investment with the idea that they want to lose money. Exactly. I don't buy that scenario.
So what do you make of this? I mean, my whole theory in the SoFi Weekly podcast was that Noto was signaling, that deposits were going to be strong, that he was trying to inject some more security in the eyes of investors. Is there anything there, or am I just grasping at straws in terms of him trying to quell the fears around investors in light of SVB, or is he just buying because he's DCAing in?
I mean, at this point, he's not really DCAing anymore. I think I put the figures somewhere. Hold on. I guess I didn't. I think it works out to something. His cost average is something like 540 a share. Don't quote me on that. It's in the low fives, I think. And keep in mind, he started buying when it was just around 14, maybe a hair over 14, I think after Q2 earnings in 2021. So he's been buying the entire way down, as you said. And look, we don't know the guy. He has his own reasons. I still stand by you only invest your money if you think you're going to make money on it. And I think he thinks he's going to make money on it, which is a bullish sign. You know, you don't see him selling, you only see him buying. To me, that's bullish, but you can't base your investment decisions on what somebody else is doing. That's just one piece of the data. But from the positioning and him buying the shares in the face of the Silicon Valley eruption, I think that's bullish. And he was trying to send a signal, but that's my own personal opinion. And I believe we share that opinion. He was trying to send a signal that he's not running. He's in this for the long haul. He's putting more of his capital where his mouth is. And that's what I want to see. I want to see a CEO that's buying shares.
Yeah. And I mean, just to echo that, in December, right, when morale was at an all-time low, stock was in mid $4 range, he picked up over 1 million shares at $4.42.
Yeah.
And just the reception from that, from retail investors, I mean, if you just scroll through Twitter, the guy was like a hero because of what it signaled to the wider market in terms of, you know, like that Wolf of Wall Street, like I'm not fucking leaving type of thing.
Yeah, and I'm not going to name any names right now, but there's a lot of high profile CEOs, and one that I'm thinking of right now that has done a lot of sales.
Who are you thinking of?
And, you know, no buying. So, look, take it for what it's worth. I think when you see a sea of green and this guy allocating millions of dollars into this,
Yeah.
as I've said before, he sees all the background data. He has the best beat on this company. Not me, not you, he does. So if he's going to keep buying, keep throwing money in, let's not forget, this guy was an analyst at Goldman. He knows what he's doing. He knows what the market wants. He's building a company that I happen to think is going to work, and I think that this is bullish.
Yeah, and the interesting part is if we take one further extrapolation from that, it just shows this inherent confidence in his ability to execute in my mind. Why? Because he is putting all of his money in an area that he can influence 100%. I can't run Tesla yet. Tesla is my biggest position, but I have confidence in the leadership, in the product and the brand, whatever. Same with SoFi, second largest position. With Anthony Noto, he's putting all of that money on himself. He's backing himself. Why? Because he is running that company. And so he's essentially putting his entire net worth in his own ability to execute for that company, right? And so I think that in itself just shows this person who I'm not worried that they're going to slack off because they're incentivized to not do so.
Do you want a CEO that doesn't have skin in the game, or do you want a CEO that puts his money where his mouth is? I mean, that's really what it is. And the guy's not running and hiding. I mean, he's continuously doing interviews. He's continuously doing fireside chats. This guy's not running and hiding. You know, he's out there and he is doing what he needs to do.
Yeah.
Are you still reading the chat?
I'm reading, responding to the chat. It's just, dude, honestly, man, when Amit runs these things, I can just go on mute and just autopilot. And whenever I have a take, I just include that. But when I'm running it, there's a lot of things I have to do in the background. And it's just, I don't, you know, it's interesting. Okay. So going back into your article, I want to highlight one other thing because I found it was interesting. But you basically highlighted that one of the reasons why you expected the SVB meltdown to be positive for SoFi in Q1, you know, you also touched on the student loan forgiveness and how that was expected to end with payments started in September 2023. I know we've talked, I mean, on the podcast, we've talked quite a bit around that lawsuit. Interestingly, one new piece of news around that is on this fireside chat, Anthony Noto, let me see if I can pull it up. he talked about the student loan refinancing demand, and I think that was really interesting. So let me see if I can pull that up. He mentioned, so I can share. By the way, if anybody has questions, pull them up and we'll do our best to answer them. But Anthony Noto mentioned, we've not seen a change in our student loan refinancing business post the lawsuit. I think he also talked about, I have the full quote here, but basically he said, this is not about loan forgiveness. It's about payments resuming for those not eligible for forgiveness. We weighed the benefits versus the risks and concluded it was right to file. So two things there. Number one, obviously they consulted the board. They took all of these different measures into consideration before making a decision to do the lawsuit or not. And then the second thing is that they've actually, despite the backlash from a PR perspective that we're seeing on Twitter, I mean, it is possible that is maybe a vocal minority. Maybe that is, a smaller segment, because Anthony Noto said, we've not actually seen a change in the business post the lawsuit, which, I mean, at least to me, is a little bit of a sigh of relief.
This is probably the one thing I'm going to disagree with Captain Noto on.
Okay.
But I am sure that they consulted a wide majority or wide range of lawyers. I am sure that they had a lot of discussions, and this decision was not made lightly. I probably would not have gone down that road, but I am also not running SoFi. From a business standpoint, it makes sense to go down that road. No, I just don't know if it's worth the risk of having a target put on you. But I don't know. We'll see.
Interesting. Yeah, I mean, I'm against the move myself from just a purely PR perspective. I just found it interesting that I was expecting the numbers to come in, significantly worse for Q1 as a result of all of this that happened. So interesting.
They can't get worse than they've been. They're horrible.
Yeah, no, that's a fair point.
I mean, when you think about it, this was a $2 billion a quarter line of business for originations. Nowhere near it. So, I mean, it can't get worse. But nobody knows what's going to happen. I'm not planning on student loans coming back till 2024, even though it is supposed to be August 30th, which is 60 days after the June date. So, I don't know. I'm not getting excited about this because I don't. Would it really shock you if it gets pushed off again?
No.
At this point, no.
No, it wouldn't. So I just want to bring this comment up. Noto said the student loan business hasn't changed. Well, yeah, because nothing was happening with student loans. Nobody's refinancing their student loan when they're under a moratorium. That's a good. I think that's just the point that you brought up as well, Stephen. Like their business.
Well, and think about it. Think about where the Fed fund rate is now. Like, what are the refinancing rates going to be at?
Right.
At this point, they may have, some of these people may actually have a better rate than what they can get. And there's no need. I mean, I don't know it would be nice to know what the average student loan interest rate is. I have no idea what it is. It would be pretty interesting to know that.
And I don't mean to trigger you, but do we want to segue this into what the other piece of news that happened today around the Fed hiking by a quarter point again? Stephen basically asked me behind the scenes. He's like, let's not go into this because I'm going to get really upset. And 34 minutes in, I run out of things to talk about. And
no, look, there's stuff to talk about. I'd rather not talk about the Fed fund rate. It's done with. They were hawkish. There's nothing else to say. I mean, there's a lot to say that I'm not going to say. Let's just put it that way.
Okay. Fair enough. Yeah, I didn't like the move either. Honestly, I thought that they were going to pause, but I don't know. it's going to probably come back to bite them or us as a whole in a couple of months. But what do you want to pivot to then, if not the Fed?
Yeah, if we start talking about the Fed, it's going to get bad. So I'd rather not do that. But look, you got SoFi reporting in month and a half. You got the big banks starting to report in middle of April. I think that we're going to see deposits inflowing very nicely, and it's going to set SoFi up. I mean, look, this is a company that has tremendous potential, but we don't know what's going to happen. There is a lot of unknowns, but SoFi's delivered each and every time. Man, you want to talk about the Fed so bad, don't you?
No, I just want to pull this comment up. Tanner's just trying to trigger you, man.
Well, that's fine. Very simple. I didn't vote, so it doesn't matter. Until there is voting from my phone, I'm not going and standing online. Sorry.
Yeah, you're going to be waiting for a while, I feel like.
Waiting for a while.
Fair enough. Yeah, so
I mean, hold on. And my vote doesn't matter. So let's just say that.
You had to add that last little point then?
Well,
okay.
Look, the Electoral College was set up freaking 200 years ago. Sorry, there's not 10 million people in the country.
Right.
There's almost 400 million people. Do it by popular vote. Everybody's vote matters then.
Right. No, I mean, I definitely do not disagree with that. It's just, I mean, we had
look, if you live in a state, regardless of what side of the aisle you're on, regardless if you're an independent, it doesn't matter. If you're in a state that predominantly swings one way and you are on the other side of that, it's not going to matter. So popular vote, you'd probably get a lot more participation.
Yeah, no, that's fair. Coming back to SoFi, I think, so here's just my take from everything that I've been seeing, or how I guess I've been interpreting the pieces of news that we've been getting with.
I can't believe Tanner put that. Who would I vote for?
You know what, man? Tanner is very serious when it's his own podcast, and he's complete shit disturber when it's my podcast. So I'll talk to him about it on Friday, because he's just trying to throw me off my game. He's trying to get you to talk about politics, like Tanner.
Yeah, and he should know I don't get political or talk about politics. So
yeah, he probably does. That's why he probably asked.
Yeah.
So all I was going to say is that all of these pieces of news, I guess I'm biased. I mean, we both are. You're probably one of the biggest SoFi bulls that I know out there. Every single time you're on the podcast, it's I just get super freaking bullish.
Yeah, except for the share price. They have not given me a reason to be bearish. And I am a very big believer on that. Until you give me a reason to be bearish or not trust the management, if my investment thesis has not changed, why should I change it?
Yeah. And I mean, look, we will make the point that SoFi was at $5 like 11 months ago. I think Kyle tweeted that today, and four earnings reports later, and they're still at $5. So,
well, people are not, I shouldn't say, how do I want to phrase this? When you do the due diligence and you look at the quarterly numbers, they lost $40 million net income, I believe. I'm not looking at it. I believe the number is 40 million in Q4. And if Captain Noto is saying they're going to get GAAP positive in Q4 2023, you would think sequentially that's going to go down. Even if it doesn't and it stays flat for those 3 quarters, they're going to burn $120 million. I believe they have 1.4 billion in cash. They're not in any trouble from a balance sheet perspective. And they're going to be GAAP positive inside of the next 9 months. So what is there really to worry about at this point? This isn't a company that's losing 500 million or 700 million a quarter. I mean, they lost 40 million. They're well capitalized, and they have a road to GAAP profitability.
Yeah.
This is when I look at it and I think about, okay, I'm locking my money up knowing I'm not seeing it for 5 to 10 years, and I'm fine with that. So there's nothing for me to get worried about at this point. Now, if something happens and makes me change my mind, yeah, I'll sell my shares at a loss, but I'm nowhere near that.
Yeah, and look, what I will say is that let's not forget the silver lining in all of this is the fact that Q4 came out and Noto said, "Hey, we will be profitable by the end of 2023, by Q4 of 2023." So that is something that I think everybody has to keep in mind, regardless of all of the chaos and noise that's happening on a day-to-day basis. SoFi is still executing. SoFi is still releasing best-in-class products. They're still building. They're still innovating, and they're still on track towards that profitability. For all we know,
And they're doing it without their largest line of business. Like
right? Without
that's
student
the thing
loans,
that nobody acknowledges except for us. That if you look at a company, you look at how they tackle adversity. You want a management team that's going to be able to call an audible and perform and execute in the face of adversity. Think about if you're in a fight and your dominant hand, you can no longer use it.
right?
You got to figure it out. SoFi's back was against the wall. Student loans was chopped out from under them, and they still figured out a way to get the job done. So they're going to get to gap profitability without student loan originations coming back full-fledged. It's running at less than half mass right now. What happens in 2024 if it actually comes back online?
Yeah.
That's what people aren't thinking about. 2024, 2025, 2026. That machine starts rolling again. That's just another line that is now intertwined with everything else, and everything else that was complementing it. They're all different lines of business that can all stand on their own.
Yeah, it's not like we're going to cease to have students or higher education in 3 years. Like it's still going to be a business line for SoFi that's going to grow.
One of my coworkers and I were actually talking about the cost of college because her daughter's, I believe, in ninth grade, and starting to think about that. And when she told me how much some of these colleges are that you wouldn't think are so expensive, it's crazy. The cost of college is crazy. And it's just one of those things that irks me because you expect young adults to take on 200,000 plus in student debt to get an education, and to schools that I wouldn't even think would be half of what the cost is now. It's just absolutely astonishing.
Yeah, and that's the crazy part, though. It's just so normalized to the point where it's just super. It's just the norm, right? Everybody has to do it. It's just something that you absolutely have to do. That I don't know. From an investor perspective for SoFi, obviously that's bullish, but
Of course.
from everything else,
Yeah, it's a never-ending hamster wheel that's always going to rotate in that direction. You're always going to have people graduating high school. You're always going to have people going to college, and people are always going to have to take on loans to pay for college, unless the system changes.
right. So just looking at Tanner has stolen my audience, it seems. They're all still hyped that he jumped in the pool. Did you catch that last episode when we made this guy jump in the pool?
What do you mean jump in the? Oh, because he was on vacation?
Yeah.
I was watching some of it, and then I got distracted.
Fair enough.
I got distracted bidding on baseball cards, by the way.
Oh, okay. Well, that's a key detail that you had to add in there. So yeah, you see this comment: Fed funded student loans total 1.6 trillion. So it's definitely going to be a huge business segment. I mean, the only question right now is just like, when is it going to start to continue, right? When is it going to come back?
Yeah, I mean, I'm not following it too much because it's changed so many times that I wouldn't be shocked if it changes again. And
Yeah.
look, we know that business is going to be there whenever it comes back on. And I'm more interested in Technisys. I'm more interested in Galileo, more interested in the cyberbank. I'm more interested in what SoFi is doing outside of that, because my thesis is that they do become a top financial institution. You don't become a top financial institution by just being predominantly a student loan company. So to me, it was a blessing in disguise. It may have sucked for them up front, but it made them focus on everything else, and it's making them a full 360 vertically integrated company.
So interesting that you mentioned that. Going back to the B of A fireside chat with Anthony Noto, the host asked, so on the technology segment, are you starting to see the momentum of cross-sell between Technisys and Galileo? And Anthony Noto's response was very interesting. He said, yes, we're in conversations with big, large financial institutions. We just went in conversations with before. We didn't have the complete stack. Banks are really challenged to innovate. The cost of their technology stacks is just growing exponentially, and their businesses are not growing exponentially. Many of them face the issue of having old cores, old technology stacks, competition from new entrants, and innovative products is increasing, not decreasing, while costs to actually compete are exponential. So,
can you bring up
yeah,
in their presentations, it was early 2022. It was the one with the Technisys acquisition. I don't remember exactly which one. It was definitely Q1.
It was a presentation, not a PR, not a press release.
I don't think it was a press release. I think it was an actual presentation because it actually outlined the cost savings. I want to make a point based on what you just read, but I don't like giving bad numbers, even though I believe I have them memorized. I would like to get that slide up.
Sure. I can also get you the transcript of the acquisition of Technisys, and we can.
No. Visual is better for everybody looking.
Okay.
Just
was it Q1 of 22?
I believe so. I'm going to investor relations right now. I'll try to find it.
Okay, let's take a look at the Q1 presentation. I'm on the Q1 presentation, but they don't have anything about the Technisys acquisition. They never really do.
I think it's no, that's a transcript. Maybe it was in the Q4 2021. Hold on.
Yeah, so okay, maybe that. Yeah, but there's nothing here. I'm on the Q4 2021 one. They have the same slides for all of them. What was the number that you wanted to bring up?
Just give me one moment.
While you do that,
just Tanner's making you laugh.
Yeah, no, Capital Exotics hyping me up.
Okay, here we go.
Yeah, go ahead.
If you go to 2/22/22 is the SoFi Investor Day presentation from February 2022. It's the first presentation of 2022.
February 2. Okay, got it. Hold on.
And if you could go to, it's the last slide, the transaction overview.
Of course, it's the last slide.
And my numbers were correct. I had in my head.
Pull this up right now.
So let's think about what Tevis just said about the old banks, the costs of running their stacks not being vertically integrated or anything. Let's look at these numbers in bold real quick. Create approximately 75 to 85 million in cumulative cost savings from 2023 to 2025, and approximately 60 to 70 million annually thereafter. So this is what they believe this is going to save them. Imagine what this is going to save the larger archaic banks that weren't in the situation that SoFi was in and didn't have access to this technology. So even if this is a prolonged process with onboarding and getting the deals done, this doesn't even include what integrating Galileo into these old archaic banks infrastructure would do. Mm-hmm. So there could be a ton of synergy with cross-selling, but I really do think that the regionals are going to be looking at this because, look, they're not buying companies to build this stuff out. They're going to need to switch to something. And SoFi is probably going to be in the best position to facilitate that. And some of the really large banks may use this also. I think it's going to be very interesting in the next 3 to 5 years to see which companies are utilizing the cyberbank platform from Technesis.
So just to build on that, Anthony Noto continues saying they have ongoing conversations with a significant number of financial institutions that we didn't have a complete solution for before. So now, as a result of the cross-selling between Technesis and Galileo, they are hitting a lot of these big financial institutions. And I mean, when you say big financial institutions, like what names come into your mind? Those are probably the names that they're talking to, right?
I'm not thinking JP Morgan, but I'm thinking Citibank.
Sure, yeah. Bank
And the
America,
only reason is I know JP Morgan is doing something with another company. I just don't remember the company, but they invested hundreds of millions, I believe, in a cyber platform. But yeah, Citibank, definitely companies like that. And look, I was surprised Wells didn't try to acquire SoFi.
right.
So, I think that this is going to be huge. And I think that this is something people are not really paying attention to or just not putting in their investment thesis. Like this could be very, very big. And when you go into a room to pitch somebody, what better test than, hey, this is what we use.
Right.
And we have X amount of deposits. This is what we're doing. This is what we use.
Yeah. And ultimately, I think that they're just going to talk about the value that they're going to unlock for these banks. Many of these banks are increasing in costs, increasing in competition, decreasing in profits. And so, decreasing in the technological innovation, they're running on legacy stacks. And so when SoFi comes in and, Anthony Noto provides the example here saying that you sign up and you can use checking, and direct deposit in less than 2 minutes. And, it's completely built on one technology stack. Takes about 6 weeks for some to launch if they want to, because we own the whole stack and we build it end to end. And we could walk into a big consumer brand that's not in the financial services sector and offer them XYZ brand checking and savings. They'll build it for you. They'll launch it for you. They'll market it, and you get a revenue split. And so it's just plug and play out of the box, right?
One of the things from the SoFi Weekly podcast from this week, I think Amit made the comment of he's sick of hearing AWS a fintech.
Right.
I think he actually said that to you.
Right.
And I heard him say it today on one of his shows, the AWS a fintech. And that's exactly what they're building, is the AWS a fintech. And to my knowledge, there is no other company that owns the entire back end the way SoFi does. And have a national bank charter. It's a trifecta. They have the payment processing, they have the cyber bank, and they have the bank charter. It's a trifecta. It's the holy grail.
So that's Amit for you. We know that he's...
Amit, I watch your stuff.
He does it begrudgingly, but he watches it.
No, I watch it.
Thanks, Amit.
I appreciate it, Amit.
So, yeah, and look, I mean, Amit can say all he wants that he's sort of sick of us talking about the AWS and fintech. Ironically...
he understands it, and I think it's one of the things he's bullish on.
No, absolutely. I'm just, giving you a hard time. But ironically, it's also... Now is the time when we should be talking about the AWS and fintech, because the entire value proposition of this, the moat, so to speak, is the cross-selling opportunities between things like Technesis and Galileo, and moving more and more into their own in-house cores, and then providing all of that as a white label solution for all of these banks. Like the sum of the parts, or the sum of the whole, is more than the parts, so to speak, right? It's because of that cross-selling, right? And we talked about, what was it? SoFi moved away from the checking provider, Bancorp, right? SoFi moved away from Bancorp to presumably do it in-house. Credit cards are probably going to be next. You have Technesis, you have Galileo, you have all of the pieces that you need. Insurance is going to be its own core very soon. So, I mean, if you think about it, this consolidation in terms of SoFi's cores and their technology platform and their business segments is ultimately what is going to become a white labelable B2B product offering for the largest banks out there.
And we're just thinking domestically. Like, we are trained to think domestically. This is an international model.
Yeah, and like, if you think about it, the banks need this. It's not like,
Yes.
oh, this is a nice to have for them. They're facing, like I said, increasing costs, increasing expenses, decreasing technological innovation, decreasing profits, decreasing revenues. They're faced between a rock and a hard place where all of a sudden it's becoming more expensive and they're getting less of a squeeze, so to speak, from a profit perspective because of all of these incumbents. A product like SoFi is whatever SoFi decides to charge for it, or Galileo, let's say, whatever they decide to charge for it, these big financial institutions, the Bank of Americas, the Citigroups, the Wells Fargos of the world, they need it. They
Well, let's
need
think
it to keep
about the
up.
secret sauce. Secret sauce, efficiency plus cost savings.
Right.
That's the secret sauce right there.
Right.
Efficiency plus cost savings. How could you not want to sign up for that? If this product is as good as what we think it's going to be, and if this product is going to create efficiency for the banks that are archaic, and if it is going to lower their cost of revenue and their operational costs, it's a win-win for them, and it's a win-win for SoFi.
Right. So,
SoFi is not gaining any customers by making something that's more expensive and less efficient. Let's just be very clear on that.
right. And that's exactly true, right? And so I think that, again, I mean, Anthony Noto, I think in one of these fireside chats, he was talking about the progression of the company. And he was saying that a lot of the years that brought us to this point have just been sort of years in the background where they've just been building the infrastructure. And only now are we now going to start to see how all of these pieces of the puzzle fit together, right? It's like a Quentin Tarantino movie. Like all of these, scenes and characters are completely unrelated, but at the end of the movie, they all sort of meet together and you see, and it's just like this really cool thing, right? Probably a bad analogy. I feel like Riley right now, but that's essentially what it's like. I hope he's watching. Otherwise, I'm gonna feel bad. No, but that's honestly what it's like, right? Because 2023 is really the year where they're actually going to be consolidating all of these pieces together, and that's the exciting part.
Yeah, they started working on this in Q1 of 2022. I mean, I'm sure that a lot of progress has been made. And if you still have the presentation open, the slide before the transaction overview, it shows their additional go-to-market opportunities. Their roadmap is into South America. Like, this is not just a US-based platform at the end of the day. Did that for our buddy. But at the end of the day, because he hates when I say that, this is something that's going to go into many different geographical locations. And this is something that has a huge opportunity.
Right. And before we talk about that, KC Can't Ho, thank you for the 38 Hong Kong dollars. 5K subs. I think we're 7 subs away from 5K. So 7 of y'all mofos out of the 87 of you that are watching, click that red button in the bottom and let's get to 5K. Sorry, Steven. I had to, be a YouTuber for a second there.
Oh, I should probably, I don't think I follow any of you guys. I just like tune into stuff.
What the actual fuck?
I'm gonna follow all of you right now. Hold on. Like, I don't even know if I'm following Amit, to be honest with you.
Yeah, that's fair. You don't need to really follow Amit though. So
I gotta follow
has
all
enough
you guys.
followers.
Hold on. No, I definitely am following Amit.
Amit, he's our golden boy in the SoFi Weekly podcast.
Okay, I subscribed.
Perfect. All right. Do you want to explain this this chart right here, or this diagram, I should say?
The joint go-to-market?
Yeah.
Yeah, I mean, it's just, I think a lot of people, even myself sometimes, get so stuck on the US because it's the US, it's the biggest market, but banking is universal, and this has cross-border opportunities that are applicable to any country. And this South America is a huge opportunity, and who knows, maybe this can go into Europe also. This has tremendous potential in the back half of this decade. And that's why I've always said, this is not a one-year investment. This is a 5 to 10 year investment for me. It could be a longer investment. I don't know. But
Right.
I just see a lot of potential because this isn't some fly of the night company. This is a company that's building a real product that is going to meet the needs of tomorrow for not just banks, but the customers. And I don't see the younger generation going to Bank of America, JP Morgan. I just don't
Right.
see it.
And I think this also emphasizes the cross-selling point even more, right? Because you don't have so much overlap from a geographic perspective in terms of the businesses that you're servicing. Technisys is predominantly Latin American and South American. Galileo is predominantly US based. And so when you think about what those services can offer to just each other's client base, then presumably you're doubling up, right?
Yeah, definitely. And if there are banks that have multinational business lines, even better.
Right.
And admit I
Exactly.
was following you. I am now following futures, focus investing, and all the other ones, fundamentals of investing, following everybody.
So I want to bring up this comment because I made a video about this quite a while ago. Let me actually go back to see when I made a video about this, and just as a speculation video, realistically speaking, Stephen, around the insurance products, and this was a while back. This was on September 29th, 2022. I made a video called SoFi's plan to acquire Lemonade. And the markets have been straight down since that time. And it's becoming interesting, right? Because we know that from a lending perspective, home loans is probably the number one indicator, right? Because home loans was something that they were blocked for so long on a third party. And now that they found a new partner, my brain is basically saying they're absolutely, the reason it took them this long to vet that partner was because they want to acquire that company in the near future. So that is to consolidate their cores. Insurance is a similar aspect of this because SoFi right now just collects a finder's fee for all of their insurance partners. And Lemonade is actually one of the companies that they do that with, that they refer people out to. And it could be interesting, as an acquisition, because this company has just been beaten up even more so than SoFi.
Insurance is a difficult business. And as much as I say I would love to own an insurance company because they print money until something goes drastically wrong. So I think it really depends on what type of insurance you're talking about, what they're trying to do. I need more information before I can really discuss that.
Yeah, I think, obviously, like, we're not going to be just wildly speculating on something without a basis. It seems as though if we're thinking, what are the dominoes to fall from a consolidation of their cores perspective? We know that by 2025, SoFi wants to be sort of all in-house with their cores. Probably home loans is going to be next. Probably like credit cards, some around their invest product, and then home loans, and then probably insurance is going to be towards the end of that. But the reason why it sort of came up, and it's come up a little bit in the chat, is as a result of the valuations. Lemonade itself is under the $1 billion market cap as a result of having fallen so much. I'm not saying that they're going to buy them. I'm just saying that the more these valuations fall disproportionately to SoFi, we know that this is SoFi's plan to consolidate in all aspects of their business so as to offer one unified product offering and have cross-selling in their flywheel. It just becomes more interesting to talk about.
Yeah, it does. Once again, insurance is a very fickle business, and it depends because we're not thinking about brokerage services. We're probably thinking about underwriting policies. That becomes much different. So I would like to see much more information before I give an opinion on it. Yeah, it's not something I'm ready to discuss right now. I need a lot more information because it is such a beast of a business, and you're not just going to go buy an insurance company that's underwater. You're not going to buy an insurance company with a bad book of business. And I'm not saying that Lemonade does. I've never looked into Lemonade. Got no clue about the company. But there's a lot of things you got to really take into consideration. I mean, if you're writing flood insurance, you're going to think twice before offering flood insurance in parts of California, or you're going to be offering a huge premium. I mean, you got to really look at the actuarial process. You got to look at all the policies that are written. There's a lot of analysis. I'd like to know what they are thinking about doing. If it's home and auto, that would make sense as a flywheel, because, okay, I can get my home loan here and I can get my homeowner's policy here for insurance, because you have to get homeowner's insurance. So that would make sense. But I'd like to see a lot more information on it first.
Yeah. And I mean, just to piggyback on that insurance is fickle aspect, it's also fickle because insurance is one of the biggest areas where bundling is the value proposition, right? You're going to go with whatever, Allstate or Geico or whatever. You want one provider to provide you with home, auto, pet, life. Exactly. Because that's how you get the lower rates overall, right? Through that bundling experience. And so
it's efficiency. You don't want to deal with 4 different carriers.
Right, exactly. So, I mean, okay, so we can leave the insurance point aside. Is there anything else? I mean, we're at just over an hour. This did better than I expected. Honestly, I didn't expect 71 people, but is there anything else that you wanted to chat about? You know, what you're seeing in the market, or maybe
I'm
not.
seeing a sea of red.
Yeah, it's going to continue probably for
everybody's seeing a sea
quite
of
a
red.
while.
So, look, it is what it is. I'm not worried. I'm just deploying more money. It is what it is.
Yep. And on that note, I bought SoFi 2 weeks ago. I bought SoFi last week. Probably going to be looking to buy either this week or next week as well. Just straight DCAing in. Like Kyle on Twitter mentioned, and I mentioned earlier on this podcast, SoFi is the same price that it was 11 months ago or 4 earnings calls ago. A lot has happened to the business in a positive trajectory in those 4 earnings calls, and the stock hasn't moved. We are at book value, or we definitely flirt with that book value line. It's and meanwhile, that doesn't correspond with how the company is carrying themselves. They're not skittish. They're not backing down from not only the Supreme Court, but also the FDIC insurance and what's going on with, other banks. They're like, hey, we will happily take all of the money that flows out of all of these institutions. We are in a power position.
Okay, it's looked at as a risk-on company.
Right.
It's looked at as a company that's getting hurt by rates. It's looked at as a bank. It's looked at as a ton of different things. And there's the sentiment's not great. Obviously, it's got a high short interest for a reason.
Right.
So, we need to see some of the short interest leave. I mean, I don't know if it's going to. May take a couple more reports. Look, investing in individual companies is not for everybody. Sometimes it's better just time in the market in a traditional S&P or total market index fund.
Right.
If you can't handle the swings, you can't handle the volatility, you can't handle seeing red in your account or being down from where you were a week ago or 6 months ago, investing in individual equities is not for you. And there's nothing wrong with that. People probably make more money investing in S&P index funds and not worrying about any of this stuff. It's really, when you really think about it, the amount of time that I spend, put my Seeking Alpha stuff on the side, the amount of time that I spend researching individual companies and drive myself crazy with this, it's a lot of time, but I enjoy doing it. It's fun to me. But a lot of people are not spending the amount of time or doing the level of research that I'm doing, and they're probably better off just investing in an S&P fund. There's nothing wrong with that.
Right. Yeah. I mean, it's interesting, man, because the moment that I started making content around this stuff, it sort of forced me to, because I'm talking about it so often, because I'm doing all the research, that it became really difficult for me to have a long-term buy and hold boring portfolio, right? Because something happens, some new news changes, there's arbitrage opportunities, there's opportunities to make money if I go short or if I go long. I mean, FRC went up like 40% yesterday. I could have just played some very, very simple calls on it. So just the fact that we're sort of plugged into the matrix day in and day out makes it really difficult for us to have just not only that long-term perspective, but to just still keep on with the plan.
Yeah, I mean, my accountant gets mad at me every year because the amount of brokerage accounts that I give him in my statements. He's like, "Can't you consolidate these?" I'm like, "Yeah, I can, but I'm not going to," because each account has a different perspective.
Purpose. Yeah.
Exactly. One account's a dividend account. One account is an account I made specifically for an article series on seeking alpha. Another account is a speculative account. Another account's a tech account. Another account's this. Another account's that. I mean, if I'm doing something in a specific account, that account has a specific reason. So that's kind of how I keep myself somewhat compartmentalized with it.
Yeah, I mean, for myself, it sort of got out of hand in 2021. It was like easy money, and then in 2022, I said, "Hey, look, I can only rebuy stuff that's currently in my portfolio. I don't want to have like a 20 stock portfolio because there's no real
Oh, you're talking to
opportunity."
the wrong person.
Yeah, exactly. So I was like, I want to have a super concentrated number of stocks that I'm highly convicted in, and so all throughout 2022 and even now, I'm only buying 2 or 3 names total, and so as a result of that, you have an asymmetric breakdown in my portfolio where 2 names make up like 70%, of the total pie.
So, okay, while I just made that face and my eyes are still closed because it's hurting my heart what I just heard,
Yeah,
I'm going to assume that this is all outside of a retirement account, and in a retirement account, you're doing something completely different.
you can assume that, sure, but it would be
No,
wrong.
we're going to have a talk after this.
Yeah, I mean,
We're going to have a serious talk after this.
You want me to go on ETFs in my retirement account?
Like I said, we're going to have a serious talk after this. Doesn't need to be on this.
Kind of worried now. You want to have it off camera? I don't have.
Oh yeah, no, 100%. Oh yeah.
Fair enough. Okay. Is there anything else that we want to chat about? I'm just looking through the chat to see if there.
Yeah, I mean, we cover SoFi a lot.
Mm-hmm.
And I know you're a big Tesla guy,
mm-hmm.
so we're not going to talk about that.
No, we'd be here for another hour.
It would be we should probably do a separate podcast on that because I am planning on writing another Tesla article pretty soon. I've been procrastinating on it because I haven't had time. Tesla articles are the one company that takes me a lot of time, and when I say a lot of time, probably 6 hours, 7 hours. That's a lot of time to me to do a 4,000 word article, but there's certain pieces of information I need to go get because it changes so often with car sales and everything. But we should do a separate one because some of the bull cases I've seen are freaking ludicrous. But what are some other companies that are interesting you? Or where do you see opportunities right now?
Honestly, man, I found Amit is going to be laughing at me from home, but I found the whole like Bology Bitcoin ringing the alarm bells. I found that really interesting, just because I mean it seems that there's this inverse correlation between like the banks falling and Bitcoin rising. Bitcoin, I think, just broke through a technical level that for the last year that it hadn't broken through. So that was interesting to me. But realistically, I think for myself, just Tesla, SoFi, Revolve is my 3rd largest position. I mean, they're a clothing company. So
I don't even know what that is. Revolve?
They're pretty cool because they do they partner with influencers and their entire marketing is influencer marketing. And so let's say, Kim Kardashian wants to come out with her own line of clothes, then Revolve would handle everything from the logistics perspective, and then that celebrity influencer would promote it, and then they would have a rev share. And as a result of this, the gross margins on that business are like by and large higher than what is expected for other competitors. So interesting to me, but at the same time, I mean, it's my 3rd largest position at like 7%. So Tesla and SoFi are by far and large the biggest ones, and they're definitely the ones that I'm not only the most bullish in, but the most knowledgeable in. I think for all I know about SoFi, the numbers off the top of my head, the sort of perspective, the bull case, I know so much more about Tesla. I just don't make content on Tesla because I think that between Dave Lee, Rob Maurer, Sawyer Merritt, and a whole bunch of others, that
Wait, who?
Sawyer Merritt on Twitter, and also James Stevenson makes really great content on Tesla as well. There's a lot of fantastic research on that company. I just don't cover it as a result of that, just because I have to come with, I either have to be first or I have to have a new, fresh perspective on it, and it's difficult to do those things. But so SoFi is really the main content driver, and then Tesla and SoFi are the main holdings in the portfolio.
There are two companies that I think can really do well in this environment.
Yeah, let's talk about it.
That are undervalued. It's going to be no surprise to anybody, one or maybe both of them. Meta Platforms is going to go, my opinion, much higher. I think it is still very undervalued. I've been super bullish on it forever. It is still trading under where I think fair value is, but this company prints money and it's a duopoly with them and Google in advertising. More than a third of the global population uses their products. It is just, I think it's a phenomenal company, and I think it's going to continue to rebound. I'm very interested in seeing Q1, and I think Alphabet is going to continue to rebound.
Wow. Meta's already done a 2x from the bottom, hey?
Yeah, I had an article come out when I was at like 92 or so.
Yeah.
But I'm not saying I called the bottom because I had a lot of articles come out along the way down. But I really do believe that they are going to continue this rebound. They are still significantly undervalued when you look at an equity plus multiple on free cash flow versus the top 30 companies in the S&P.
And you thought Google is your second pick?
Yeah, Alphabet. Yeah.
Is that a play on Bard, or what's the bull thesis?
I could care less about AI. People can beat me up for that. I could care less.
Is it just purely valuation? Like what's the take?
Yeah, the valuation's crazy. We can do. I mean, I have all the statistics in a spreadsheet. You have Google. I mean, if you want to stay on, I can go over. We could do something else another time. But if you look at Google's balance sheet, and look, this is a company that has 113 billion in cash sitting in short-term duration between cash and short-term investments.
Right.
I mean, really think about that for a minute. That's crazy. The total equity of the company is $256 billion. You look at their free cash flow, they generated last year $91.5 billion in cash from operations, and their capex was $31 billion. They generated $60 billion in free cash flow last year. Like, that's crazy. Crazy.
Well, okay. So, I mean, I think that it deserves its own episode along with Tesla, and Meta is one that keeps coming up, which, I mean, it's interesting to me as well because, there is an argument to be made that it's like value trap-ish with regards to all of the advertising changes. But I really think we should do, a separate episode because all of these deserve deeper dives than just, a 10-minute segment. Because I think, I mean, I could probably argue both cases for both companies in terms of the bull and bear. I know that maybe Tanner, if he wants to join as well, I know that he is, he definitely has a strong take on Google, but that's more towards the AI aspect. I think for this stream, though, we can definitely cap it at SoFi. One thing I will say, and this is not to you, Stephen, this is to the audience. There's 64 of you here, and you mofos have me literally stuck at 4,999. So whoever wants to be the last one, then just hit that button and let me know in the chat if you're the lucky winner. Because you guys got me trapped here in this purgatory that is 4,000 subscribers. No, I'm not going to scroll down so you can see the $10 I'm making from YouTube, Tanner. Thank you very much.
Oh God.
And in all honesty, I didn't expect the stream to be an hour 20 minutes. I'm kind of glad that it was, because we got more people than I was expecting, like 15 people max.
I'm glad people found it interesting.
I mean, dude, you have like 24,000 subscribers on Seeking Alpha. It's ridiculous. Actually, speaking of, everybody, because I popped this up a couple minutes ago, if you haven't already followed Steven, do so on Twitter. His tag is DividendStreams. He is a Seeking Alpha contributor with the link in his bio. What were you saying the next articles you have coming out were going to be, Steven, around Google?
I started writing one tonight on energy transfer before we started this.
Mm-hmm.
I may finish it tomorrow. We'll see. Try to get out Friday. And then, look, I'm definitely going to do one on Tesla probably over the weekend. We'll see.
Hey, man, if you need someone to talk through Tesla,
Nope.
I can probably do that.
Nope.
Wait, you're bearish on Tesla, aren't you?
So,
oh shit, we opened a can of worms.
I am neutral I'm neutral on Tesla today. Because I'm no longer bearish because of how much the price has dropped. I could swing back to bearish soon. I'm currently neutral. I got to see what my new research determines. Tesla is one of the most phenomenal companies you could ever find.
But yeah,
phenomenal. The valuation is not as crazy as Nvidia, but it is, it's rich. I got to take a fresh look at it before I give a solid opinion on it.
See, this is where people lose me, right? Because they go with these massively innovating, game-changing companies, and then they look at it from a valuation perspective. It's the same argument that people make, or like, why is SoFi's dividend yield not the same as JP Morgan's shit stock? It's like, well,
SoFi doesn't have a dividend yield, sir.
That's my point, right? Like they're different companies, and so for Tesla, I don't know, maybe it's the hopium Kool-Aid, whatever you want to call it, but I just think that it's one of those companies that fundamentally has the ability to cause a paradigm shift in a lot of their product lines, and people are still like, well, it's it's tangible book, whatever. So
you won't get me disputing that by any means. I mean, they are a phenomenal company, and they are doing things nobody else is doing. There's a lot of positives about it, and I don't see growth reversing. That's not what I'm saying. I cannot find where I saved this damn spreadsheet. I have too many things. I must find it, or I'm going to have to redo it, which I don't want to do. And we can have a full-blown dedicated segment. I will run you through my thinking, and we can have a constructive conversation around it.
I would love that. I'm definitely open to that. I'm not like, a crazy perma bull that's like, oh, the stock price is going to be 30,000 or whatever.
And I'm not saying it can't go up. I am not saying that. It can 100% continue to go up. It could go back to all-time highs, and I wouldn't be surprised. I just think that the price is rich for the amount of profit that they generate.
Right.
That's all.
And if you guys want to see that, just let me know. Thank you to Jason Coyle for being the lucky winner. You win my undying love and gratitude for being number 5,000 and nothing else. And
Do you get a prize for getting 5,000 subs?
No, do you think I'm rich? How much do you think YouTube pays me? Because it's nothing. It's not what Seeking Alpha would pay their people.
I asked if you get a prize. I don't know. I don't have a YouTube channel. I don't know the YouTube environment.
Yeah, it's nothing. Yeah, so I think Chris brings up a good point, saying, let me see.
Chris? Is Darth Chris?
Oh. No. If Darth Chris was on, he would have been talking like 40 minutes ago, man. Chris Hernandez, it's true. Investors are still looking at it as a car company and not seeing the true value. And I think that, this is the interesting part, right? Because we're going to start a Tesla conversation, but not to get into that, but they just got, Moody's just actually raised their rating on them. They got this blue chip status, and now a lot of institutions have the green light to essentially pile on in. And the reason why it took them so long is, they're self-proclaimed to be the best functional AI company in the world. Tesla is, in terms of real world AI, given how much data they collect. And people are still like, nope, sells less models than Ford does. Sorry. So I think it's a massive discrepancy, man. There's people that are like, there's going to be robots in our home and Neuralink chips in our brain. And then there's people on the other side of the spectrum that are like, no, it's 4 wheels and, a hunk of aluminum. So anyways, it's going to be an interesting debate. I think, not even a debate, a constructive.
No, it's going to be a conversation. I actually found the spreadsheet and I'm just looking for a certain thing, but yeah, it's, we should do a dedicated episode on it. I think the way that I'm going to describe it to you will make you very interested.
Yeah, I'll let you know. There's nothing that you can say that will make me not have 45% of my portfolio in Tesla. That's probably going to make me go into ETFs. Like, I don't think there's anything.
That's not why I was going to.
I know. I'm just messing with you.
I'm still shocked that you said that, but okay.
I'm 28, man. I think, if I get, and it's like, okay, well, it's 2022. How much more wiped out am I going to get? Like, if I get more wiped out, then I get more wiped out. But if I'm planning to retire in whatever, 20 years, let's say 30 years, then if we don't have some massive, apocalyptic scenario, then I think SoFi and Tesla are going to be fine.
Oh, Tesla's going to be fine.
Yeah, SoFi is too.
Don't take my words out of context. SoFi is going to be fine. Tesla's going to be fine. SoFi, I think, is going to be fine, but remains to be seen, obviously. We got to see what a lot of things do. Tesla's already proven that it can generate $7.56 billion in free cash flow annually.
Yeah.
Huge number. Not many companies can tout that. And what they've done is incredible. And I'll give Elon Musk and the whole team at Tesla all the kudos that there is, because they went up against arguably one of the hardest industries, underfunded, and did something that probably only them can pull off. Like, it's remarkable what they've done. Remarkable.
Yeah. And they're only going to keep accelerating faster. If you've, the Investor Day, I think it was, it fizzled out for a lot of people, as all of their events do. Because,
yeah, I didn't read it. That's why I haven't written an article yet on it.
So, yeah, that would be...
There's things I just don't understand about it. Okay, I don't buy the whole robo-taxi premise. I just don't.
Right.
Unless you are opening up an LLC and you're buying Teslas to only put into that service. Then, okay, if the numbers work, completely get it. But I'm sorry, I don't buy that somebody is going to purchase a Tesla and then willingly put it in this robo-taxi service when they're not using it and have it drive around people to make money. I would never allow one of my vehicles to be in any robo-taxi thing. I don't care how much you pay me.
Yeah, but okay, so there's a couple of arguments there, right? Because you're thinking of it from a car owner perspective and then from a rider perspective, right? And so there's different cases there. But I just think that, okay, so let's say from a car owner perspective, you value, let's say, the cleanliness of your car, just the sanity of having it be yours and not strangers coming in and out. Totally fair. I think Tesla can also themselves, as a company, have a robotaxi fleet. So in addition to allowing,
and I do agree with that, and they could segment 5%, 10% of their production to that and start a sub business underneath. Completely agree with that, and they may do that if it economically works. I would never dispute that. I just don't see that when I hear, because people do say, "Oh, everybody's going to do this. Everybody's going to do this." No, everybody's not going to do this. People aren't spending 80 grand on a car just to put it in a robotaxi thing at night. Sorry.
Yeah, and that's totally fair, right? But there's also like, what percentage of that total fleet or production can they put into robotaxi? And look, ultimately, if they just churn way more as robotaxis, they can just stop sales altogether. And instead of selling these things for an average sales value of, like, let's say $40,000, that car over a course of a year can earn more than that.
And look, they may try to do a whole paradigm shift, and if anybody can do it, it's them, and you don't want to bet against them on that.
Yeah, and since you mentioned paradigm shift, I think the main thing around that is around the AI bot, right? Like, it's totally being discounted, and I think rightly so, right? Analysts cannot model it. They're not selling any. You don't know what an average selling price is going to be for it. You don't even know the function of it right now. At the same time, the vision is there. I mean, Elon has said multiple times that people grossly misunderestimate the robot business and the AI component that lives within that robot. The car is like robot on wheels, and then now they're building the humanoid. And that has the potential to be far in excess larger than the car business. Like, just think about that statement. It's wild.
They're going to have some serious competition from what is it? General Dynamics and Boston Scientific?
Boston Dynamics? Yeah, I mean, I don't think so, right? Like, Boston Dynamics can't mass produce these things.
Yeah.
It's like a research company.
Have you seen the videos of what those things can do?
Absolutely, but I'm just saying.
Crazy.
Like, look, Tesla's moat is their production prowess. It's the machine that builds the machine.
No question about that.
Right. So why are their cars the smartest out there? Because they have the most amount of data points and the best processing for those data points. It's the same formula of success applied to that robot. And if Boston Dynamics has been doing it for a while, their robots can do parkour and backflips. That's great, but can they produce 1 million units a year?
Yeah, and look, this is the next frontier. This is the next evolution. Tesla is definitely prime position to capitalize on it. We just need to see what some realistic economic models are about how much these are going to cost and what the profit on it's going to be, and build some models. But we're a little bit away from that at this point.
Right. And yeah, a lot of ways.
But the future looks bright.
It's all execution risk, right? Can they do it? Can they not do it? And how long is it going to take them to do it?
I'll never say they can't do anything.
Right.
I'm convinced they can do anything they put their minds to. Truly convinced of that. The problem is when I see bulls say $10 trillion valuation. Hey, freaking GDP of the U.S. is less than 30 trillion right now. You're telling me that Tesla is going to get to a 10 trillion market cap anytime soon? Come on.
I mean, okay. Let's. I want to
say
like that.
And then ARK. I think in their 2026 evaluation, they had Tesla's revenue just under $1 trillion. I have it in one of my Tesla articles. We can look at it next time. But even that is pretty far off from where they are now.
2030, you said?
No, 2026.
Yeah. I mean, ARK has been the most bullish on the street for a while. To an extreme degree.
I don't know who's more bullish, them or Ron Barron.
Yeah, well, I mean, I would say, both, but Kathy, because robotaxi is a fundamental building block of her price modeling, right? And so robotaxi is like, again, it's that paradigm shift, and the AI bot or the Tesla bot, humanoid bot, is another paradigm shift, right? 10 trillion compared to 30 trillion. Yeah, that's completely unrealistic, but in 10 years, let's say the GDP won't be 30 trillion. It'll be much higher than that. And in 10 years, how many of those bots can they produce, and how many of the physical labor jobs can that bot replace? What does that GDP become at that point?
Yeah, and does the government allow them just to do that without putting some type of protection on workers? And it becomes, is it going to make workers more efficient or extinct? And I think that's where the fine line. If they can make it where it's going to make productivity increase and make workers more efficient, there's not going to be a problem. But if it gets to the point where it really starts job displacement, you're going to see a lot of regulation come in. So there's just so much we don't know.
I mean, so this is what I'm saying, right? The paradigm shift, right? Like
Yeah.
the assembly line came in, and it was job displacement because 90% of people were, out doing field work and farm work, and then the entire economy shifted as a result of the Industrial Revolution.
So I just want to give you their numbers, not my numbers.
ARCs.
Their numbers. Have you seen their actual expected value case?
I'm not going to stretch to try to defend ARC's numbers.
No, I'm not asking you to. I think it's freaking a little out there. So 843 billion revenue expected case by 2026. 280 billion EBITDA, 5.3 trillion market cap by 2026.
They have their assumptions built into their projection, don't they?
I mean, their bull case is
that was their base case?
That was their expected case.
Fuck. Okay, got it.
Their bull case is 6.7 trillion market cap.
Mm-hmm.
Okay. So let's put this in perspective. I believe the US's GDP is around 29 trillion right now. At 5.3 trillion market cap, you're saying that Tesla is going to be valued at 18.27% of the US GDP. That's not accounting for GDP growth or anything. So call it 15%. Sure. Like, that's just to me like,
yeah, but that's a multiple, right?
Their profit and everything goes through the roof, then maybe.
That's their multiple, right? Like, and I mean, going back full circle, you're talking about investing in these businesses based on the actual fundamental metrics of those businesses, and not a 15x or a 20x, price to sales multiple that you would put on that, right? And so I think that, sure, it sounds like a very alarming number to be 15% of a GDP as a market cap, but you don't know what the actual multiple is on that market cap. If you measure it from a revenue perspective, how much revenue are they doing versus, the GDP or?
Yeah, I mean, so 843 billion revenue.
Right.
So that's like 3 or 4% of what the GDP would be.
Right. So.
Yeah, it's just wild.
Like I said, I'm not. It's just those ARC's numbers have always been crazy,
and they're not even the craziest. I've seen people say 10 trillion
in market cap.
Yeah, I don't remember what year. It was definitely before 2030, but
we'll see. Right? It's all like right now. The name of the game is what is the multiple on production, because the ASPs, the average selling prices, they're pretty fixed. The cost of goods sold and the gross profit on all models is pretty fixed. And so you can trickle down all the way. And this is why, like Rob Maurer on his channel, for example, just measures delivery numbers, the sort of the numbers coming out of China for how many cars have had VINs installed and all around delivery and production, because everything else is pretty plug and play to get to that revenue number at the very bottom. So again, to your point, Stephen, it's what gets measured gets managed, right? Analysts right now can only price in vehicle production. Right now, everybody's looking at Cybertruck. How many will they produce? Exactly. So, yeah, I think we spent like 20 minutes on Tesla.
Yeah, let's do a.
Robert, thank you for joining. Appreciate you. I can't believe we have
Tesla.
I can't believe we still have like 50 something people here, even though we were talking about Tesla this whole time.
I mean, I can send you this and we can do the valuation real quick if they want to see it.
Well, let's see if they want to see it. We'll ask them. Okay, just comment if you guys want to see it. Other than that, doing a sanity check for SoFi. Is there anything else that we wanted to chat about for SoFi specifically, or have we just beaten that horse?
No, I think we covered pretty much everything.
All right, Mr. Future Investing wants to see it.
All right, let's do it.
Tanner,
We'll do it for him.
Tanner, do you own any Tesla or not? Because I know Riley just got into it.
Bring him on. Bring him on. Let's have him get in on this.
Yeah. Okay. Tanner, if you want to get on, just let me know, and then I can just forward you this link.
Oh, wait. He's probably too tired. It's probably too late.
If you come on, there is a chance that you're going to jump into the pool again. I mean, that's not we haven't completely ruled that one out.
Oh, if he's on vacation, he better go get a coffee and freaking get on.
Yeah, at this point, I need a coffee. But all right, let's see.
All right, I'm responding to your email with the spreadsheet.
All right, the link is in your Twitter DM, Tanner. If you wanted to hop on, if not, then don't. Come on. Where were you sending me this?
Your email.
In my email. Yes, sir. Let me open this up. Okay. Let me download
and we'll still do a full dedicated episode on Tesla.
Yeah. Let me try to get this open. I have to open Excel. It's probably going to crash my computer, but let me try it.
Dude, Excel is fundamental.
I don't use that.
What do you mean?
It's all about the Google Sheets, man.
I use Google Sheets too. I use both of them.
Really?
Yeah.
Excel.
There's certain things I like about Google Sheets that to automate my spreadsheets that I can't do in Excel. But there are things I like in Excel.
Okay, let me see if I can pull this up on the screen, and then you can walk us through this chart.
Yeah, so this is kind of an insight on how I look at things from a very fair value based in my own mind. It's my own doing. You know, why is that coming up is unknown.
I don't know what that's supposed to say.
That should not be happening. That should be the company name. What the fuck?
I don't know.
Can I not fucking share this?
Yeah, I mean, you should have just share it from your computer, man.
All right, hold on.
Just present on the StreamYard.
Yeah, I'm using multiple computers. So give me one second.
If you guys have not had a chance yet, like and subscribe below. We got over 5,000, but we got to catch up to Tanner. I think he has significantly more. So let's get it going.
I may have to start a YouTube channel now. I feel left out of the party.
Yeah, dude, none of this comes naturally to me. So just trying to hype people up at 11 p.m. when I'm just like, I want to crash myself is, and I'm not like an overly expressive person. So it's always an interesting experience. People are saying your spreadsheet is insane.
It's not insane. Talking about insane. All right, where StreamYard is where in the fucking internet browser?
Sure.
All right, how do I present?
Right beside settings on the bottom nav, there's a present button. Okay. There you go. Your entire screen is up. Okay.
Can you see everything?
Yes, I can. Okay. Wow. We have a bunch of companies. Yes, sir.
All right. So quick little tutorial on how I look at things. I like free cash flow better than net income because it's harder to manipulate. It's cash in minus cash out. So your cash from operations minus capital expenditures getting to free cash flow. You don't have the different tax items and you don't have, look, you can possibly, and I'm not saying companies do this, why would companies do this? But there are certain write-offs companies get, and there's certain GAAP accounting rules that impact net income. Free cash flow to me is always the first line of profitability I want to look at, then net income next. So for a valuation perspective, I think about it as the equity in the company is the baseline, because that's what's left off if you were to go to liquidation, assets minus liabilities.
Right.
Then a multiple on free cash flow. So I took the 32 largest companies in the S&P, and you will not see Amazon on here because Amazon had negative free cash flow.
Right.
So I took them out, and I took Disney out because Disney's free cash flow was like 100 million or something like that. And it just, the distortion was crazy. So without those two companies, I have everybody from Apple to Coca-Cola, Thermo Fisher in here, Salesforce, et cetera, et cetera.
Mm-hmm.
So I look at it as you have your market cap, you have your total equity from the balance sheet, cash from operations.
Mm-hmm.
Apple is insane, 109 billion last year in cash from operations, your CapEx, and then those two netted out is your free cash flow. So then I look at as what is the price to free cash flow for each company? And the average price to free cash flow for these 32 companies is 31.39x. That's the multiple.
Okay.
So I need to update this right now to that number. What the fuck is my number block fucking on? Hold on. Because obviously the market changed since the last time that I did this.
So I think my case against this chart is going to be super easy.
So the average price of free cash flow is 31.39. So you have a discount column here to the average price of free cash flow. And then the way I look at a very base case is total equity plus the average price to free cash flow. Hold on. So 31.39x times free cash flow plus total equity gets this market cap. So I would say Apple is discounted by 20% right now.
Okay. So the 31.39 is the average price to free cash flow, and you're just comparing the delta or the variance between
so I'm multiplying the free cash flow by that multiple. Understood. And then adding the company's total equity to find a baseline value for the company. Okay. So my thing is Meta Platforms generates 19 billion in free cash flow, and Tesla generates 7.5 billion in free cash flow. $1 free cash flow is $1 free cash flow. Right. Doesn't matter. So that's profitability.
If you sort descending by discount by column I.
Yep.
I'm just curious to see this.
Yep.
So let's just assume that we go off of this for a second.
Smallest to largest?
Yeah, the negatives first.
Okay.
So presumably these would be the best companies to invest in because their price of free cash flow is the furthest away from the average. So why are you more bullish on Meta and Google as opposed to JP Morgan and Exxon?
So Exxon, because oil prices have come down to, I think crude was around 70 per barrel. And when Exxon reported, I don't remember what it was at, maybe 90. But during that last 6 months of the year, oil was over 100. Their free cash flow is not going to be where it was last year, this year, based on commodity prices.
Okay, but
so you got to take Exxon and Chevron with a grain of salt.
Sure. Okay.
And I have been buying Verizon, full disclosure. I think Verizon's very undervalued. And the dividend's around 7%. You can't go wrong there.
Well, I guess, yeah, for the dividend. Okay, but my point is, Stephen, that so your top two picks, right, are Meta and Google. Let's just put it that way. They're number 12.
I am the most bullish on. Yes.
That you're the most bullish on. They're number 12 and number 17 out of this list of 33. My point is, if this is the main filter by which you are determining where the opportunity lies.
Oh,
What happens through number 1 through 12?
This is my base case of what they should be worth. Now, obviously, there are other factors like growth and other things that come into it. But when I look at this, and I just think about Tesla.
Yeah.
Tesla has so much built into it, and their free cash flow needs to more than double to get to where Meta's is. And this was an off year for Meta with their free cash flow. And yet Meta is a 518 billion market cap and Tesla's a 600 billion market cap. And Meta just doubled.
Yeah. So I guess the growth point is my main counter there. The reason why is because people for the longest time looked at price to earnings for Tesla. And the problem with that is the earnings were compounding by 50% a year. And eventually it got to that point where Tesla was like 40 or something price to earnings. And now it's even further below that. My point is that next year, Tesla and Meta can be in line in terms of this metric because their free cash flow will have significantly increased in disproportionate relation to everything else on this list because they're $1 trillion company, or let's say $600 billion company that's still growing 50% a year. And so taking that into account, by the reason why I don't like the traditional metrics on companies like Tesla that are super high growth is because the moment that they look cheap on a spreadsheet, you'll already have missed that opportunity because you're buying for that future growth that would make it a bad buy on paper on here.
And while I would agree with some of that, it becomes very hard. This is not a young company. Okay. This is a company that's generating 7.5 billion in free cash flow. This isn't a startup. So a lot of it is priced in already. And the price is much more reasonable now than where it was earlier in the year. I mean, Tesla's price to free cash flow used to be around 160, I believe. I'd have to go back to some of my earlier articles to get the numbers. But there are some people that think 20x free cash flow is what you should pay for a company. That's why I look at it a little bit differently. And I go with the average of the top companies because who's to say one, and I don't like going tech versus another company because look, at the end of the day, businesses are created to generate a profit. Profit doesn't care what you do to generate it. $1 of profit from tech versus $1 profit from consumer goods or advertising is still $1 of profit. And if you have a 50% growth rate, it's 50% growth rate regardless of the industry. The company should be valued the same because they're still making the same amount of money at the same pace. But that's not the way the market works. I look at this as a template for me to look at where is value, what may be undervalued, and what may be overvalued. And for me, I think Tesla's getting much more reasonable, and that's why I'm no longer bearish on it. I think the valuation is neutral right now. And I think the price of free cash flow will still come down because I think their free cash flow is going to grow, but I think it's still overvalued because there are companies that are generating more free cash flow consistently that are valued at a fraction.
Yeah, but the earnings potential, like the growth potential, for those companies might be also a fraction. My point is that we should be looking, when we assess price to free cash flow for Tesla, the main thing that I'm looking for is the free cash flow, not the price. The market controls the price in the short term. And a lot of that is psychology.
So let me ask you this.
But
if Tesla was to double their free cash flow,
sure.
Do you think that the market cap should be at $1 trillion?
Man, Tesla's half of my portfolio. I don't look at it from a free cash flow perspective.
I get it, but the reason I say it is because you have Meta, that's generating 19, and they're at 500 billion. You have AbbVie, which is generating 24 billion of free cash flow, and their market cap's 271 billion. Their 24 billion in free cash flow. It's still $1 is $1. Tesla would need to 3x their free cash flow just to generate the same free cash flow as AbbVie.
Yeah, but at the same time, I think that, okay, so a couple points. Number one, this is the furthest thing from apples to apples because all of these businesses play in different spaces. So there are different tailwinds and headwinds for each of those industries. I think the other point, to make for Tesla, having a longevity in their free cash flow growth is the fact that they have secular growth trends and they're literally skimming the surface of their potential runway in terms of the market. Not from a market cap perspective, but in terms of the total sales, right? Because if you see all of these countries that are trying to go carbon neutral, that are trying to go, fully EV in 10 years.
That's not going to happen.
Sure, but they're going in that direction is my point. And so if I think of free cash flow,
the reason I'm saying it's not going to happen, I actually was reading through the EIA outlooks that just got published in March. I got to find it, but I believe, if I remember correctly, my memory is pretty good. Penetration for EVs is going to be less than 20% of the market. I forget what year, but it was like 2040 or 2050. Something crazy. I was astonished when I read it.
20% of the global market?
I think it was the U.S. market, not the global market. I think it was the.
I don't think that's right, because that's close to what it is. In California, it was like 17% or something like that in terms of that penetration already. So if that's by 2040, then that's assuming no growth in EVs, which is wildly unrealistic.
Yeah, I will find an email to you.
Yeah, and we can save it for our Tesla conversation. But my point is that if you have a boon from a government perspective because all of these countries are trying to move there, then the name of the game in my mind is, if we're looking at free cash flow, how long can Tesla keep up a 40 to 50% growth rate of their free cash flow? Because at some point those numbers will flip, because all the fundamental variable is the free cash flow growth number. And AbbVie, let's say, might be on top right now, but in 3 years, that free cash flow will move in that direction, right? And so I just think that, again, going back to my original point, if we look at these charts, they show a very sort of reactive view as opposed to a forward-looking view. And I think Tanner even mentioned it in the chat. He said, well, if you sort these by peg, then that chart might look very different. And so that's the reason why. Nobody was really buying Tesla for what they're doing today. Everybody's buying them for what they're going to be doing tomorrow.
Nobody's buying them for what they're doing it today. Yeah. All I'm saying is that they would need to triple their free cash flow to get to the amount of free cash flow that a company that has less than half of the valuation is currently producing. And then if they let's just say they get to somewhere around 50 billion in free cash flow, which is entirely possible in the future.
Sure.
Where are people going to say that they should be valued? That's my whole problem with Tesla, because Apple's a $2 trillion company and they generated close to 100 billion in free cash flow last year.
Yeah, but okay, so 2 points. Number one, the company that's doing 3x Tesla's free cash flow today could have a declining growth rate, or it could have a fairly stagnant growth rate, or it could have a single-digit growth rate. That's it's a laggard essentially, or it's a very established company that doesn't really have high prospects. And so you could always be looking at Tesla needing to 3x to get to their free cash flow, but that's also how you stumble into value traps. Number one. Number two is, where will the market value Tesla after they 3x their free cash flow? It will be entirely a byproduct of where it goes next.
Not my numbers. This was released by the government on the 16th of March.
Okay. I could definitely share some numbers as well.
Yeah. Look, I'm just saying that this is the EIA, their presentation from last week.
Yeah. No, I'm not saying like this is. I just want to share also some numbers just to get to the bottom of it in terms of a penetration perspective from the US alone, because I know, well, from the numbers that I've been seeing, that it's definitely, higher than whatever this says, 7%.
No. Well, that's right now. And then in 2050, it'll get to about 17.5%, 18%.
Right.
But who knows how big the vehicle market is in 2050? but penetration is nowhere near what people are talking about, according to the EIA.
Right. And now I think we have officially hit the 2-hour mark. So
All right, we can shut it down.
Congratulations, sir. And to surprisingly, the 42 people that are still watching this. Sorry, I'll just drop this. Yeah, I can't believe there's 42 people still watching this. Definitely just like my mom.
Well, we got past 4,000 subscribers. So
5,000
5,000
subs. We have passed that. So yeah, that was fun. I've been staring at that 4,000 number for a while. That was a bitch to get past.
I gotta get to 10,000.
Don't remind me, man. I'm not even looking at 10. I'm like, okay, 5,100, 5,200. So
yeah, we can do a full segment on Tesla. I'm sure that that'll be fun.
Yeah,
and my cognitive function is not perfect right now, so don't really want to go much further into it.
Yeah, I mean, it is 11 p.m. our time. Tony says, good discussion. Throwable says, I'm on following back to 4,099.
There you go.
Tanner says, I watched it all, Tevis. Please don't attack me in DMs for making you laugh. And then somebody says, I love you, Tanny. And I'm like, mofo, I've been here talking for 2 hours. My voice is leaving me, and you still love Tanner more just because I don't have a fucking pool. Okay, so fair enough. We will be, on Friday, we'll be doing the SoFi Weekly podcast that normally scheduled hours, probably talking about some of the same topics, definitely covering the FDIC, definitely covering the fireside chat with Anthony Noto, and probably some of the metrics that you heard here first with Steven and I. If you want to follow Steven, I am just going to plug his channel once more. I have it right up here, so I will do that now. Let me just present my screen. Gotta make sure it's the
wow,
right
the
screen.
futures are going up right now.
At DividendStreams on Twitter. Definitely follow Steven Fiorillo and check out this link right here for his Seeking Alpha articles. Futures are going up, you said?
Yeah, the NASDAQ's up 84 points and the Dow's up 151.
Wow. Well, we'll see what tomorrow brings. I feel like every single day is just another dumpster fire, one after the other, which is
I really hate some of these headlines of articles. SoFi, last chance to board. Like, really, last chance to board?
I mean,
you can't say that. I mean, you can, but nobody knows when the last chance to board is.
Yeah, I mean, people will write what they will. I make clickbait material myself, so so I can't really say anything. But look, man, I'm just trying to get Anthony Noto on this on the podcast. That's all I'm trying to do, and then everything else.
Text us?
Can you?
I may have a cell phone number.
Well, fuck. Like, what are you waiting for? You waited 2 hours to tell me that?
I was gonna do it live on one of the. So him and I have emailed me before.
Okay.
And he has put his full contact information. I've never texted him before, but I do have his cell phone number.
Okay. Can you just tell him to come on the podcast or shoot me a DM or something?
I mean, it was just a really quick email back and forth. I congratulated him on earnings and, said something else, blah, blah, blah. But yeah, I mean, I was considering it. I feel weird about that. I don't know the freaking guy. He put it in there. I don't think,
I just honestly,
I don't know if it's appropriate for me to text and be like, hey.
There's
I'll send him an email and see if he'll come on.
There's this one thing here. I'll show you this real quick. Look at this. So this person said, if you have Wells Fargo, blah, 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 I suggest you check your bank account. There's a couple of threads. And then this guy, was having troubles. Called, texted 4 times to make sure it would process, was reassured, blah, blah, blah. Got a lame email after hours. No one can resolve. And then Anthony Noto says, just
he's
DM
very proactive on Twitter about those things. He's responded to quite a few people personally about issues.
That's my point, though. And that's what makes me think that he's going to be a totally chill guy. That, if a couple of retail investors have made 24 different podcast episodes a weekly with his company's name in the title, that it's just like, I'd love to see him come on and just shoot the shit one day. And even if it's a pre-recorded thing that, the company wants to vet.
I'm going to email him right now.
Thank you, sir. And
all right, you convinced me. I'm going to email him live. I'm not going to share my screen. I'm not sharing my screen, right?
No, don't share your screen.
Right.
For
the I want to make sure my screen's not being shared. You're good. Okay.
For the 49 people that decided to wait 2 hours and 5 minutes, this is the fruit of your labor. We are emailing Anthony Noto at 11 p.m. at night.
Yeah, but you got to remember, it's 8 o'clock his time.
Yeah, that's actually very true. Yeah, and Tanner brings up a good point, saying even if it's pre-recorded, it is important. Investor relations can totally vet everything that we do or don't say. I'm sure Riley will want to just talk to him about the football and Amit about the tech platform and Tanner about the numbers. And I'll just be happily sitting in silence along the way. Tony says, text him. Maybe he'll reply.
I feel really weird texting him.
Yeah. I know, actually, since I have 40 some odd people here, I know Riley made a great post today where he basically tagged the SoFi Weekly podcast, and he asked people who they want to see as a guest. He asked people who they want to see as a guest. This has about 4,200 views so far.
How many viewers do we normally get?
SoFi Weekly?
Yeah.
We get about 150 to 200 people consistently live. However, when Amit and I and Tanner live streamed the Q4 earnings, we got 600 people watching live. So, I mean, if Anthony Noto comes on and we can plan and promote that, then we can definitely get, at least 300-400.
All right, so this is what I wrote.
Yeah.
I participate in a live SoFi Weekly podcast on YouTube with several other SoFi investors. We would love to invite you on the podcast and even do a pre-recorded one so you and the team at SoFi can vet it previously. Is there any chance you would consider joining one? We normally get several hundred people watching live.
Yeah. I would say that, one thing that I would say is that our combined audience is definitely, 30,000 people plus. So, and look at that special guest for everybody.
Boom. I just wanted to pop in while he was sending a live email during a live stream.
Tanner's just in bed, no camera.
Yeah, no, I was just editing a video. The camera's all put away. So.
I thought you subbed that workout.
Sorry?
I thought you subbed all that workout.
Not for every video, and lately I've been doing it myself because, yeah. Anyway, that doesn't matter. But I haven't been doing that for every video. You'll definitely notice the difference between certain videos, whether it's from an editor or not.
Tanner, you with your current setup, you're really putting the podcast in my name because normally it's just YouTube videos.
What do you mean?
Fundamentals Investing Podcast.
Oh, gotcha.
Your audio only. All right, Steven. Do you send it or what?
I'm just writing one more sentence.
Sure.
What would you say the combined audience around is between all your
So
viewers and then my people on Seeking Alpha?
oh boy, you have 24 on Seeking Alpha. Amit has 17. Tanner has 8, I think.
Coming up on it.
I have 5. So I mean, we can do the math. 13 plus 17, 30 plus 24, 54, 55.
Add a couple hundred there for Riley.
No, Riley has like
good Twitter following,
2,000 or something on Twitter.
Yeah. No, guys, I love the discussion today of SoFi / Tesla.
As you can see, it's very catered to my my channel.
Yeah, not biased at all from Steven on the anti-Tesla commentary, showing nothing but value stocks and comparing it to the largest growth stock in the world.
Not the largest growth stock in the world.
Name a larger growth stock than the largest growth stock in the world.
Well, you can't name a larger growth. It's a riddle. You can't name a larger growth stock than the largest growth stock in the world because the largest growth stock in the world is the largest growth stock in the world.
Yeah, and it's called Tesla.
You're trying to trick me? Come on, I'm not that tired.
Is it AbbVie?
Please. No, AbbVie's not a growth company.
My point exactly.
Anyway, you heard it here first. He's loading up on JP Morgan's shares because of the cash flow.
I'm not.
But yeah.
But I was buying Verizon shares, though.
That is the most boomer thing you said all night, to be honest with you.
That's a 7% dividend, man. It's undervalued company.
So I wanted to pop in really quick while he was sending an email. Can I pose a couple SoFi questions?
Sure.
Mostly, you're going to keep us here for 3 hours, dude. I'm
no, he's
tired.
sending an okay, well, then hang up. I don't need to be here for long.
No. All right, I'm sending the email right now to Captain Noda.
Tanner, we have a special caller. What's your question?
Hi, guys. I love this future investing guy in the chat. He's really funny.
Yeah, apparently the chat loves him.
Yeah, no, big fan of you guys. Really quick question. Do you think that the FDIC insurance up to $2 million is going to cost SoFi, a little bit more per dollar after the 250,000, where it's technically not like it's going to lower the basis point difference on our funding costs for our loans?
So I don't have really
more information on how it's going to work. You can't really answer that right now.
I don't have a lot of the numbers to back this up, but I would imagine that the majority of people on SoFi is under 250,000, and like the fact that they upped it to 2 million is more so like them flexing on, look, this is what we can do, but it's not going to disproportionately affect them because the lion's share of their user base is under that threshold.
Right. No, I'm a massive fan of the move as well, but it's not free, and people are making it out to be free. They used to offer 1 million, just so everyone's aware. They used to offer 1 million in FDIC insurance before they were a bank, and then they stopped doing that because it cost them too much. So I wonder why they did that. That's all.
Well, they probably weren't getting enough people to make it worth their while.
Right.
But this is a much different environment than it was last year when they were doing that, considering all the publicity that this has gotten. And look, we'll see. Obviously, they're doing it because there's a reason to do it. So I would like to think, reading between the lines, that they got some inflows that made it lucrative for them to offer this. We're going to need to wait till Q1 earnings come out, though.
I think they're making a very compelling argument right now to switch over to them, right? During the midst of a banking crisis, they up their APY to 4%.
Let's use the word scenario, not crisis. It's not 2008 right now.
No. Well, in absolute dollars, it's worse, but in terms of assets under management that had failed in banks, that versus the 2008 crisis, it's much larger institutions that are failing.
Your bedtime?
Sorry?
Isn't it past your bedtime?
Sorry, Stephen. Sorry.
No, I'm just saying, like, you're always the one that gets tired.
Yeah. What, you don't get tired? Like, I don't understand this.
You get tired at like 9 p.m.
No, I'm actually back in Canada. I know everyone's loving Florida Tanner, but I'm actually Canada Tanner
Where
again.
were you in Florida? What part?
Sarasota.
Oh, love Sarasota.
Yeah, every 50 to 60-year-old does.
Oh my God, I'm not that old, but you know
No,
what?
I know.
Sarasota's beautiful.
Really, the Verizon could have thrown me.
Listen, why would you?
Do you use a lot of AbbVie products? Is that why you?
No. But I mean, 18 years of dividend growth. Come on.
Yeah, fair enough. Is the email sent, Stephen?
The email has been sent for, let's say, 4 minutes now.
Our boy Amit says,
Yeah.
How is this still going? Amit, you want to just hop on? We can do a full SoFi
Amit, just
weekly.
get on.
Yeah.
Get on, Amit.
SoFi weekly on Wednesday, baby.
We're going till midnight.
Oh my God. Can we? I have work tomorrow.
Yeah, so do I. What's your point?
All right, fuck it. We can go till midnight. There's
I,
68 people here. Well, Tanner needs to go on video if we're going to go.
We're going to do our own fireside chat right now.
I just wanted to pose that one question, guys. I really appreciate you taking my call.
Yeah.
But I was just
Tanner,
curious.
what is your projection for deposits for Q1? What do you think the number is we get at? We should do a pool. Everybody pick a number. Let's all throw in some money, and whoever gets closest gets the pot.
Yeah, I'll do that with member growth if you guys want.
I was just gonna say that. Last time we did that with member growth, Tanner won.
Let's do it with both.
Yeah. I could make a guess. Not right now, but let me just.
Yeah, no, we should do it when everybody else is on. Make some guesses and go from there.
Yeah. Well, I mean, we're definitely gonna have, as we always do, episodes leading up to earnings where we have our own projections, our own thoughts for what they're going to start announcing. And I mean, last time was a lot of fun doing the member growth polls with people. So this time we can put money behind it. And
is Amit coming on?
I don't know. Is he? Amit, do you want to come on? Just let me know, dude.
Yeah, Amit, you can take the call. I'll go from here. You probably have a camera.
Amit can actually bring some enthusiasm to this shit. I tried, Amit. I said, the what's up, everybody? Welcome to another episode. I can't do it, man.
I told him we need his energy.
Okay, guys, here we are. So, Travis and Steven, listen to me now, okay? The technology platform, Anthony Noto just said on his last fireside chat that they are actually have a full end-to-end checking and savings product. Okay, guys, how crazy is that? That's wacky, okay? Now, do you think that they're going to start offering that to, large retail platforms like Target and Walmart and other places like that they could potentially only have, like the Target Red Card, for example? What do you guys think about that?
And the funny part is, like, you have that animated voice, and I could, in the back of my mind, just see your face staring at the camera with a green light behind you, like doing one of your videos. I can just see it all. It's like seared into my brain.
Just so you know, I had to do a running head start to record this video I just recorded today. So like a physical running head start. So hopefully that gets you, I'm building the hype for what I'm posting in a couple days.
Okay.
Classic Tanner hops on my stream just to promote his own shit.
No.
You,
The only thing I wanted, the only thing I came on here to promote, aside from my Seeking Alpha link, so then you can go.
Wait, do you have any swag yet from Seeking Alpha?
No, I didn't ask them for swag.
I didn't ask them for any swag either. They just sent it to me.
Oh, gee, okay. No, I get all my swag from Morning Brew or Neo Financial. You guys can check the links out in my description. No, I'm just joking.
Tanner with his affiliate links. Gotta love it.
Guys, I mean, I'm not doing this stuff for free, okay? I love chatting with you, but I'm here to make Tevis some money.
Tanner actually wants to go. Tanner actually wants to go full time with YouTube eventually, and I respect that. So,
well, yeah. You don't like. I mean,
you better get
if it happens, sure, but I don't know if that's ever going to happen. But if it does, then that's great.
Yeah, I'm not saying I'm doing it soon. I'm just saying, I think YouTube makes more money than people give it credit for, especially in our niche. That's all I'll say.
Yeah.
And if I could just sit here with a couple guys talking about fantastic companies and, you know, roast my good friends on their opinions on...
Is there enough money to do that in this, though?
What do you mean?
Like Tevis said, you want to do this full time. Is there really enough money in YouTube to do this full time?
I mean, he's not going to do it full time with 8,000 subs.
Yeah, I'm not... Yeah. But
eventually.
You know, you put a 0 behind that and you could.
Yeah.
Like...
Hey man, I got 37 Hong Kong dollars on this stream, so it's a start.
There you go.
I love it.
There you go.
I got 5,000 subs on this stream. I got to have a good conversation. Yeah, see, me, Kevin makes $100,000 a month, but I mean,
bro, that is such a low number. He definitely makes way more than that.
Yeah, I mean, it's a low number when you compare OnlyFans, but it's a high number for everybody else.
Yeah, no. I'm not saying 100K a month is a low number. I'm just saying that is a low number for me, Kevin. That dude's probably making 7 figures a month easy. Actually, he did a CNBC article about it, or not how it's made, but whatever it's called.
How to make it.
Yeah, whatever. Anyways, guys, thank you so much for this call in. I love you guys. To be very honest, though, I think you guys are my 2 favorite.
Ooh, look at this guy.
Let's go till midnight.
To have this energy for my stream next time he's on, let's go till midnight.
Hold on a second. Amit, you're the one that's like, oh, it's getting late. Tanner will tell you, like, I can go. It doesn't matter.
Here's the thing about Steven. Steven starts off really slow, and then it builds and builds and builds, and he ends the stream at the most hype. And truly, you guys have no idea how this works. So Steven will end the live, and then he will go...
I'm good for another hour or 2.
Or 3. Like, yeah. He really does just keep going past the live. He just wants to talk stocks.
Can we also
really great dude?
Really quickly talk about the fact that Amit is just
get on here.
He's just
what are you doing? You're typing. Get on here.
He's just flexing this $5. Like, did Adia get funded or something? Do I not know about this? What the hell?
Yeah, I thought I was Amit. I thought I was getting 5 shares of SoFi for jumping in a pool. What happened to that?
Yeah, what happened to that, Amit?
The crowd wants Amit to join. Gotta give the people what they want, Amit.
He says, no, I'm in bed. I just did. Man, Tanner's also in bed. Why do you think his camera's off?
You have a laptop. Just hit the link.
Oh my God.
Do you think I'm in bed?
Get the microphone out.
Listen to my audio quality. Do you think I'm talking in bed with a Shure SM7B? No, I'm at my desk. I put my camera down. I don't have a webcam.
Gotta give the people what they want, Amit.
Amit, you gotta give the fans what they want. This is to quote you, this is a step on your journey to become a content creator.
There you go.
Where's the link?
Where's the link?
Let's go.
We are never gonna get off this fucking live. I'm never live streaming again. I hope you guys know this.
Why?
I'm just messing.
I mean, it's only 11:25. It's early.
Nate, thank you for the $2. I will spend it very wisely and for the coffee that I'll inevitably need when Amit.
Oh, look at this! Amit had sent me an email from Daily Palantir before.
I'm not in bed, guys. Come on. Beds are made for sleeping.
I dropped
I'm
you
up.
the. Okay, there he is. Oh baby, here we go. Let's go. Sleep
Look
deprived
at
Amit.
this.
Bro,
Sleep deprived Amit.
I fucking hate Steve for having all this energy. And then when I asked him to do Palantir Weekly, SoFi Weekly, he's like, "Oh, I'm tired. I just had a cookie and some milk. I want to go to bed." Like this motherfucker now on a Wednesday night.
But the past 2 weeks have been hectic on Fridays because I've been working. Because I got
What
pay
working, bro? What are you talking about? What
I
work?
got to pay my Uncle Sam.
You write articles for a living. What the fuck?
No, I write
he
them
doesn't.
as a side gig. Don't
Yeah,
write
but I saw
articles.
what you make from it. It's enough for you to live. So
No, it's not.
Dude, AbbVie is an expensive stock, right? He's got to buy those shares. He needs a side hustle.
Dude.
He needs to buy Verizon.
Steven's in New York in his apartment beside his apartment. Do you think he can live off that wage? Like this dude's balling, okay?
I wouldn't say balling by any
No,
means.
he just got a second apartment so then he could just get away.
wait,
So
you
he could
did?
put his camera
you got a
somewhere
second
else.
apartment?
Well, so the woman who lived next to us passed away, and the management company gave us first crack at it, and we decided to purchase the apartment next to ours. And
Wow, congratulations.
I turned it into my office, and we use it for other things.
He
Steven,
did
have
it
you
just
ever,
for the
have you
SoFi
ever bought,
Weekly.
have you ever bought a stock with a golden cross on it?
I will kick you, mofo. Don't even go there.
I am not up on all of these trading patterns, but I do have gold next to me. But what is a golden cross?
You don't want to know, to be
It's-
honest.
It's when the 50-day crosses the 200-day moving average.
That's Tavis's
In-
definition. I have a different.
I don't.
Yeah.
Yeah, I don't know enough about that stuff to even give any.
Bro, when I said that when
Amit-
Chris Holger was live, that shit was the funniest.
Amit follows the golden shower candles, so he does a lot of trading these days.
That's amidst technical analysis.
I don't have time to trade, and I wish that I did. I don't, so I've never taken the time to.
Wait, so
Lord.
Steve, what cocaine is in your coffee tonight that's allowing you to stay up for 2 hours?
No, I don't do drugs.
So how are you up for 2? Bro, I did 2 streams. I came back and I was like, these motherfuckers are still live? What the fuck? Like, how's it going? Like, what did you guys even talk about for the past hour?
SoFi,
We talked to
Tesla.
Tesla for like half an hour.
Oh wait. Yeah, Tavis is a bull, right? And you're a bear.
How the United States government came out and said that by 2050, penetration on EVs is only going to be 18%.
Oh, I
In
thought you were
the
going to come to the Fed
States.
decision. I was like, we're going to talk about it?
Yeah, no, we're not talking about the Fed decision. And admit that's probably why I'm like so hyper. I'm so pissed off.
Wait, but
Not-
Steven, you've literally been wrong the whole year. Tesla's up 100%.
So it's
Yeah,
everything
I mean,
else
look,
since
I
January.
was pretty damn right when I said that they were going to decline by 83%. They declined by like 64, 65%. And then they rebounded, and I switched my stance to neutral because the numbers got better. And look, on the stream that you and I did, what did I say here? I wouldn't be surprised if it went under 100. I wouldn't be surprised if it went back to 200.
Yeah, that's true.
You
That's
know,
true.
like Tesla's a great company. Anybody who knocks Tesla as a company is crazy. Like they're a great company.
Love it. Love to hear. You're on the right track. Just,
The numbers just don't work for me. That's all.
I mean,
Like for me, if it's between Tesla and Google, I'd rather invest in Google right now.
Yeah, but ChatGPT is killing Google, so why?
I'd rather invest in Meta. But that's
Okay,
just
I
me.
knew
That's
you were
Honestly,
gonna go.
honestly, I wouldn't be surprised if Steven hasn't even heard of ChatGPT.
What are you talking about?
I mean, you guys, since I have you guys both on, do you want to address this?
What?
Yeah,
Yeah, what happened to that pod? We were supposed to do
I don't
that.
know. We need to pick that back up. We really should continue to do that.
All we have to do is one company a week. That's literally it.
Yeah.
It's not even that hard, to be honest.
Yeah, no, we should.
There you go, Nate. You have answers. I'm
Yo,
asking the hard questions.
Nate is involved in all of the finance YouTube. He's like everywhere when it comes to finance YouTube, and he's just there like a little fly on the wall.
I was
He's a real
shocked,
one.
Tevis, that you are so concentrated.
Yeah, well, I don't know. I think I don't know, man. Like I was so diversified, and then everything that I was gaining on that I was highest conviction was getting counteracted by me making losses on lower convictions. And then I was just like, you know what, fuck it. I'm in my mid-20s, scared money don't make money, and just went.
Yeah, I get
Tesla and
that
SoFi.
attitude.
Someone asked
20s,
if I'm
not
cuddling
mid-20s.
with Tanner. Tanner, do you want to confirm if that's happening?
Yes, we are cuddling.
I think this is consensus.
Yeah. Can you bring up a Twitter, Tevis, real quick?
Yeah.
Is that any possibility?
Yeah. What do you want to bring up?
Amit's reply to a tweet today about his army money comments about my melting bullets comment.
Oh yeah, bro. Tanner, you got flamed from so many people that they commented. They were like, Tanner's a fucking idiot.
Yeah, so bring that up, please. I'd love to get.
We gotta get
on it.
Steve's take on it, bro.
I'm not up on this. What happened?
Okay,
Tanner said I said something that Tanner thought was dumb, but all the comments were like, actually no. Tanner
all the comments was one comment. Let me state.
No, there was more than one. There was more than one.
Okay, hold on.
Okay, what was the actual statement?
Can we just first talk about how fucking stupid Twitter is? I can't find Amit.
No, Twitter search is like from 1992.
Amit, what is it? Amit is
investing or something like this.
Yeah, Amit is investing. Like their search is so bad, bro.
Like he follows me, I follow him. He's verified. Why can't I find him?
Put an @ symbol.
It's so bad. It's so bad.
Brutal. All right,
replies.
we're gonna go to replies. Amit, almost 10K, baby. Let's go.
He shot it in all caps, but I think maybe he's doing everything in all caps these days. So
yeah, he's taking lead from me.
Honestly, Jason rubbed off on me.
What am I looking at?
I don't know. You have a terrible search system. I could have brought
Okay,
just
can
10,
somebody tell me what it
26
was
from
then?
28.
Yeah, Bitcoin got hit. Go down. It's the reply. It's someone tags Tanner. That's where it goes.
Dude, the problem is that Amit is on Twitter all fucking day long, and you can't.
Yeah, you got to search by like Tweemex or something like this, like one of those search.
Can I
Okay,
find it
well,
on
let
you,
me
Tanner?
give the context. So, Steve, the context was,
No, you can't. I didn't.
if
like
we
that
have
anyway.
hyperinflation, the basic argument was that the United States will not be respected as the world reserves currency if our dollar doesn't mean shit, which means our military won't be respected either, and Russia and China will be more likely not to invade, but just to feel like America's not top dog, because if the
But he
dollar
said invade.
Well,
Okay.
I didn't say invade. I said they feel more
One-
likely
one
to
thing
think.
has nothing to do with the other, and
Thank you.
regardless of hyperinflation, the real thing that you have to worry about is the petrodollar going away. That's much more of a problem with the dollar getting dethroned as the world reserve currency.
Yeah, okay, but
No,
But let's say
Yeah, let's
say we
stick
have
on the
like,
topic
let's say
here.
we have like 5,000% inflation or some crazy shit, right? Just for
All right,
hypothetical.
so you're basically saying we're going to be worse than Argentina. Okay. I get it.
No, because that's basically what Balaji is that it was in the
Okay.
context of what he's. So if that happens, does the U.S. military not get delegitimized to an extent, because the whole thing that's backing the dollar is the military, and if the
No.
dollar is inflated, why is the military important anymore, or why does the military still have
I
its
have the
relevance?
thing.
I just think
Okay,
that
you
there's.
have a platoon of Marines show up on your doorstep. You tell me how relevant they are.
Yeah,
Well-
okay. First of all, Amit, he's already countered your point and he disagrees with you, and now you're trying to flip it. Okay, so let me.
Well, no, because Steven
already disagrees
with you.
wrong on this, just like you. That's all. That's what I'm
All
saying.
right,
No,
now let me.
So,
I don't know who this. Wait 1 second, Steven. I don't know
so
who this
if you
Dustin
get
guy is.
hyperinflation and you end up not being able to pay for everything,
It's a
you
Tanner
can have a
fuck
serious
up.
problem. But I don't think that has one thing to do with the other when it comes to the relevancy of the United
Wait, so
States.
you don't think Russia or China would be more likely to be like, yeah, we can take on the USA if their dollar inflates because their
No.
military?
Bro, no.
No.
I don't
No.
understand that.
So,
I really
Amit,
don't.
All right, so go on this tweet. Walk
Yeah.
us through it.
Now, listen. This is.
Wait, hold on. Economic
not hold
warfare
on.
or actual warfare?
Warfare, like real
Yeah,
warfare.
no, absolutely not.
Okay, that's
No.
the last time now, Steve. Give me one moment here, and then it's all yours. So Dustin may be a great guy, okay? Maybe a great guy, but he literally said the opposite of what Amit says. He says, Amit, just wanted to say on the SoFi Weekly, you made great points about how the military does hold up the fiat monetary regime. That's not what Amit said. He said the opposite. He
No,
said
what
the
are you
fiat
talking
monetary
about? That is
regime
exactly what I said.
holds up. No, you said the money holds up the military.
No, but it's vice versa, Tanner. That's just
No, it's not vice versa. The military holds up the fiat monetary regime.
Yeah,
The-
so my
the
point is, if
money
the
does
fiat
not
monetary
hold up the
regime
bullets.
hyperinflates, then the military dies as well. That was the argument.
So
Why
you
do we
said
invite these idiots in the first place?
So you said appreciate you. Thanks for getting it. One guy.
Hold on, you forget
vindicated
you forgot the part where he said, "Don't let Tanner walk all over you." Of course, hyperinflation doesn't melt bullets
I'm
and tanks.
here. I'm here in bed with you to tell you, okay, that these boots are gonna walk all over you because
So, Amit, let me ask
one
you.
guy vindicates you of all
No, there were more.
blame.
Look at the comments. There were more people in the comments saying that.
Okay.
Okay, but
Go to the
I'm
YouTube
here with
video. Go to the
Stephen
SoFi Weekly.
Fiorillo, and
There's people in the
he's
comments.
also gonna walk all over you. So let's go ahead and listen to that.
How much does the United States of America spend on military a year?
Okay, hold on. No, I get. So we spent 800 billion. We're gonna spend a
Okay,
trillion by
so hold
2020.
on,
My
hold on,
point is,
hold
hold on.
on.
My point is, if that
We spend
800 billion
$800
is
billion a year.
basically worth nothing.
Regardless if we have hyperinflation or not, do we still have all the warplanes, all the carriers, all the tanks, all the weapons in our stockpile?
Okay, hold on. This is a simple
Do
question.
we still have
Does
all the
Russia
nuclear
or China
weapons
not
ready
feel
to
a
launch?
little bit more likely like they can take us on if the dollar doesn't matter anymore?
Probably what's going to
No.
happen is you're going to have bigger first order effects than the military being your main problem if you have massive hyperinflation. Like it's
I
not
get
like
it, but in the context of the
hyperinflation. Oh my
military-
god, the military! It's like everything else, the economy, society, like everything. And
No, I
then-
get it.
And let's think about this. Russia can't even take on Ukraine. Like everybody thought Russia was going to roll over Ukraine in a week. It's over a year. And think about how many of their soldiers are no longer, rest in peace, but their military is dwindling in numbers. Their artillery is dwindling in numbers.
Yeah, but hold on, Steve. The reason that's happening is also because we sanctioned the fuck out of them and their economy is crippling. So my point is, if there's an economic positive correlation with the strength of a nation, like if China's not inflating and the United States is in fucking hyperinflation, I think Xi Jinping is like, I'm gonna fuck these guys over. Like I'm gonna become top dog.
Yeah,
And I don't
how,
think the US
dude?
can do shit about it at that point, just because we have more fucking like guns. Because our dollars are like all the
Okay.
political allies we have go away if the dollar doesn't matter.
Okay,
That's why
so
the Saudis are buying oil in yen or selling oil in yen instead of fucking dollars.
Hold on. Who is the world's largest oil producing nation?
I would say Saudi Arabia, right?
I'd say the
That's
United
incorrect,
States.
sir. Who is the world's largest natural gas producing nation?
I actually don't know.
The United States of fucking America.
But why don't we make enough money from it then? Like this is like what's
So-
why is Saudi Aramco posting 170 billion in profits and like the United States can't do that?
Okay.
My point is for you guys to admit there is no effect on the military if the dollar inflates is ludicrous. It is blasphemous.
That's not your argument. You
That
said
is my
That
argument.
is not your
Dude,
argument.
you
sir.
said that they would be more likely to invade if we went into hyperinflation.
Yes, exactly. Because the strength of our military would decline, which means Russia and China.
How
Look,
would the strength of the
hold on,
military decline?
maybe it's in our lifetime, maybe it's not. But Russia, the US, and China are going to fucking war. That's happening at one point. I don't know if it's now or in the next 100 years.
Can you not come on this stream after 2.5 hours and spew this propaganda and get YouTube to like completely take this down?
YouTube's not going to take this shit down, brother. I
don't know,
give you
man.
$5, so I covered the AdSense, so you're good.
Yeah, that makes it all worth it.
YouTube's going to
Okay.
take 30% of that shit too, bro.
I'm
Super chats,
sharing.
bitches.
I just want to
Steve-
know that, like, if the
Steve is
dollar,
sharing. Hold on.
Dude, I
If the
regretted my
dollar
choices
starts-
30 minutes ago.
if the dollar starts to cripple, what's going to happen? You know, is China going to magically have more? Oh my gosh, now I'm blanking. What is it called?
Here's a little lesson.
Tanner, you
Aircraft
just don't
carriers?
get it. The audience.
Are they going to have?
disagree
Are
with
they
you.
going to have more
That's it.
aircraft carriers, or is the United
Well,
States
if
still
they
going to
can
have a
buy
major
it,
advantage?
if they can buy it because their currency isn't inflated, and Saudi Arabia wants to sell them aircraft carriers because they like yen versus dollars, then yeah, they might be more powerful. That's my point. It's a very
But Mick,
logical.
can you see
syllogism.
this? The United States in 2021.
You got to zoom in, bro. There's
Do
no
I
way
have
that
to
can
zoom
see
in?
this. Yeah, please.
Okay.
It's much better.
This is in barrels per day in thousands. Okay.
Sir,
So
yes,
just look
sir.
at the first three numbers, 16.5 for US. Saudi Arabia is right here. They're at 10.9.
Why do
We're
the
roughly-
Saudis make more money than us on
Called it.
So we're producing roughly
Yeah.
50% more oil than them per day.
I mean, you're taking one company and splitting it amongst however many
Yeah,
companies
you
that the
got to
United
think
States has.
Chevron, Exxon, freaking
Yeah.
the BP America, ConocoPhillips.
We need to
Anadarko,
nationalize that
Oxy.
Saudi, bro. They figured that shit out. They're smart.
Let's go to natural gas. These are all the drilling reports of the past decade because I'm a nerd and I actually read this shit.
Anyway, all I'm saying is, Tanner, people definitely didn't fully agree with you. Even if you got 80% of the audience, 20% were like, nah, Tanner's stupid.
Natural gas, United States,
Man, what?
934 billion cubic meters production.
Even Dustin, in their own comments that you replied to saying thank you, did not say what you said.
Saudi
You said the
Arabia,
opposite.
117.
No. When he said, oh, yeah, it doesn't melt bullets, he's agreeing with me. He's like, yeah, it doesn't melt bullets, but it still will have an impact. That was the point of the tweet.
Well, bullets
I'm
are
right
still,
on this one.
Bullets are still going to be, useful. Guns will still fire, and people will be behind those guns. The military will be fine.
Amit, this is what you should do. You should go to Fort Bragg, and you
Guys-
should take a poll, and let's see if you come back alive.
Guys, I don't know about you, but I feel like Tevis' stream is kind of a little mismanaged. I don't know. I think Amit's stream was way more cultured and civilized.
But
a bunch
no,
of people
talking
Amit,
shit about
I
YouTube.
do think that you are.
This is
Wait,
just-
hold on. I'm not talking shit about YouTube. Who said I was talking shit about YouTube?
I've just stopped caring at this point. Like all my willpower to manage the stream is just.
I feel
fucking-
like, bro, I
the
feel like
moment
you
you
gotta
two
go-
idiots got on, I was just like, "Fuck."
I feel like you
So
got to
let's-
go the final 20
so we need
minutes
to
to
do
say you
something
pulled a
else.
3-hour stream.
Whoa, Tevis.
So we
Watch
need
the
to do some
profanity.
projections. Let's think about a bet for Q1. I think we should all put up some money for member growth, deposits.
Why is
and-
this man trying to bet right now?
Steven,
Like,
put up
don't
your
you own two
second-
apartments?
Put
Like,
up your second apartment. How about
yeah,
that?
put up your
No.
fucking second
I
apartment.
want a house in New York.
No, you don't. Trust me.
I want a house anywhere, man. I just want to
Yo,
own one.
Steven, I have a question. Did you watch the show Dawson's Creek when you were growing up?
No,
Never?
no.
That was a good show from the 90s. I thought you might have watched it. Okay.
How old are you?
I'm 25, but I liked watching it because like there's a girl and the guy and they love each other, but there's no Snapchat, so like there's actual like they have to actually talk to each other, and it was so cute, and I fucking loved it.
It is interesting that you say that because I actually last weekend found myself going back to movies from the 80s, and I'm like, man, life in the 80s was so freaking different.
Do we want to just live stream the first episode? I already got $5, so the stream paid itself.
Of
So
what?
Dawson's Creek.
No, it's 42 minutes, bro.
Oh my
Oh
god,
my
how
God.
bad is it?
No, we're not
It's- no,
fucking watching it.
hold on, no, this show was like it went on for 6 seasons. It was a legit show. It was a really good show. Like,
I mean, I know what it is. I've just never watched it. Of course, it's a legit show.
it's a great show. I think you should watch it one day. It's great. It's good stuff. Then, like the next girl if I ever go out with a girl again, I want to make sure she like
Doesn't
she
have
can watch
Snapchat?
this show with me. Like,
Okay.
I want to make sure we can watch the show together.
You know what I just watched, which was awesome? The Recruit on Netflix.
Wait, I saw that. I saw the first couple episodes of that too.
Phenomenal.
No, Steven, they did this Pornhub documentary on Netflix, bro. You got to watch that shit. That
Not
shit
that
was
good.
Not
phenomenal.
All right,
Because
if
they
I-
really-
Unless it's going over the economics of it. I'm
No, it
not-
is. That's the whole point. It's not actually about porn. It's like about the business of Pornhub. And it's like,
All right.
Okay,
that is
did
interesting.
Pornhub actually get acquired?
yeah, it got acquired, but it's kind of shady. The company that
Guys,
acquired them.
fucking congratulations. Okay, you went from politics to war to talking about porn on the stream.
Dude,
So,
dude,
No, we're not
both
talking about
of
porn.
you.
We're talking
That
about
is so
Pornhub.
no, but we're talking about the business side of it.
yeah.
This is a business
Yo, Tevis,
podcast.
it is like the 8th
Oh.
most
If,
visited
if
website.
I don't have
on
a
the
YouTube
planet.
channel, if it's blocked tomorrow as a result of you guys, I will be very sad.
Dude,
Okay?
Amit
I just
will
reached
let you
5,000
borrow-
subs. I can't. This can't be.
Oh yeah, hold on.
happening to me
First of
right
all,
now.
congrats for 5,000. That's
Thank you.
amazing. That's awesome. I just saw that.
So can we figure out a bet for Q1 earnings?
Okay, I think they will have 400.
No, what are we betting? We got like make it interesting.
No, I need to do some research.
Fucking Tanner, bro, needs to do some research.
You know how I got so close last time? I just asked
First
ChatGPT
of all,
and then he gets me
I
the perfect
was
answer every
1,000
time.
away from. I said 482. You said 480.
Yeah, I can Google
It
do
was
that.
479.
Steven,
close.
ChatGPT is a large language model. It's like a computer program that talks like a human.
Why do you think I'm a freaking boomer? I don't get this. I understand I'm starting to go a little gray, but I mean, shit.
Tanner's
Someone
just a
help Steven into
disrespectful
bed.
person. That's
He's
the problem.
Oh, my
no, I was just joking. No, I was just
I'm
making a
fully
joke.
aware what ChatGPT is.
Admit, bet your pound.
Of course you do. That's how you write all your articles. I'm sure of it.
Steven,
yeah,
okay, hold on,
sure.
Steven,
Okay.
Steven.
Because I didn't have 600 and something articles already out there prior to ChatGPT.
Steven.
You had the probably a large investment in Microsoft at the time. You got Noto's number. I'm sure you're connected. So
That is true. That is true.
Steven, which one's gonna do better, Palantir or SoFi over 10 years?
Oh, here we go.
That's such a dicey question.
I remember having this conversation with Steven. He said
Look,
at the
I
time
think
that
SoFi has more potential to go up, but I wouldn't be surprised if Palantir does better. I'm very bullish on both, but I just think, look, Palantir is not a consumer product. And I think that that's the big thing here. I think they're going to be more of a Salesforce type company, whereas sky's the limit for SoFi. It really is. They're not just a one-dimensional company.
I agree.
Oh, I like this answer.
Yo, you guys need to look into End Phase.
I heard you. I heard you just bought that, Amit.
Yeah, I like
Congrats.
them. It's really exciting. It's interesting. It's a very interesting company.
So the bet is Amit is betting all of his Palantir.
No, nothing crazy like that.
I mean, it's not that crazy. It's probably like $100.
Wow.
That's fucked up.
I have $55,000 in that stupid fucking stock.
Shut the hell up! No, you don't. Do you actually?
Yeah, I do. I have to throw 3,000 shares. I have a lot of
Fuck.
money in there.
That's
Yeah.
I didn't know that.
Bro, my whole channel is built off that stock. Like I have a big position. It's there. Steven probably has like 500,000 in that shit. But
Yeah, makes up 5% of his portfolio.
In the next 5 years, Amit, Audia or Palantir?
no, I'm betting on I have 50% of Audia. If Audia just gets to like 40 million, I'm set for life.
Wait.
You got to do what I told you to do.
Steven wants me to go on Shark Tank, bro.
100%.
I feel like you can do it.
You got to go.
They're just so selective with the process, but I can apply. But it's hard.
You got to apply. Think about it. Even if they don't give you a deal, just being on the reruns.
That's true.
I watch
Everybody
those
in
reruns all the
business
time.
watches that show.
Yeah, that's fair. That's fair.
All right, so we have 13 minutes left to do a 3-hour stream, and then I swear to God, I'm cutting all of you off.
Wait. I have a question. What did you guys each have for dinner tonight? Let's start off with you, Tevis.
I had shawarma. It was great. I ordered
delicious.
It. Yeah, it was fantastic.
Okay, Tanner, what'd you have?
I had barbecue chicken, and on the side I had a salad. And that was all made by my beautiful wife, Samantha.
Love it.
Wait. Isn't she your girlfriend? How did that turn to wife?
Yeah, well, I mean, she is actually my girlfriend, but we've been long time running, so I call her my wifey.
Yo, quick. Well, quick little story. I was talking to this girl once for a while, and I called her wifey just for fun. Like and then she got so mad at me because she was like, "Well, I'm not even your girlfriend. Why are you calling me wifey?" And I was like, "It's just like a little fun pet name." And then she forced me. She forced me to make her my girlfriend that night because she was so tired and annoyed. But yeah,
Nice,
okay.
nice.
Steven,
My
what'd you eat?
favorite stream of Amit's ever was whenever he was talking about all the hottest girls that he had ever been with, and yeah. The thing was, bro, the persona of my channel is like Amit is lame. He's an incel. He can't get a girl. And in reality, these people have not seen like the actual history I have with women, so they just don't get it. Yeah.
But yeah,
He's a true short king. All right.
Okay.
bro, 5'7" is enough to get the job done. It is absolutely.
No, just
Okay, so we're a dating podcast now.
We ordered a phenomenal pizza.
Ooh, New York
Who the
pizza.
fuck calls a pizza phenomenal?
Oh my god!
what?
Phenomenal.
Wait, what was on it?
And I'm not going to say where it's from, but Portnoy on One Bite did give it an 8.7. So
Steven, have you ever had Sbarro?
don't even fucking say that to me. That's
Okay,
not real. That's not real.
because Canada just recently got a Sbarro. And,
Yeah, that's great. That's not real pizza.
it's
Sbarro
not. Is it
sucks,
bad?
bro.
That's not real pizza.
Okay, I won't try.
Yo,
it
can we talk about how Canada is just like a copycat of the United States, but a worse version of it?
Yeah. I definitely agree with that.
Like you guys, like, first of all, you don't really have freedom of speech. Like you have all
Wait,
these.
do you guys smoke cigars by any chance?
Like, no, I'm not like a
I live in a
cigar smoker.
condo, so
No, I'm just wondering what Cuban cigars cost up there.
No idea.
all right,
No
so we're
idea.
gonna
We-
do last. Hold on, Tanner. Let me just say this. Last 10 minutes, we're gonna do Q&A. So ask your questions in the chat, and we can get to them. And then we're
I
calling
haven't
it.
looked at my eBay yet tonight.
We can buy marijuana like practically in Walmart.
And they
Like-
made cocaine legal in Vancouver, I think, or
Wait,
Alberta. One of those two.
Tevis, do you actively smoke weed every week, every day?
Yes, he does. Look at him.
No, I do not. Not at all. Too high strung
You
for
guys
that.
like my employer can see this.
It's just monotone. Hey guys.
That's just me, bro.
Wait, so Tanner, do you smoke?
No.
Okay, Steven, here's my question
No.
for you. Did you smoke 20 years ago?
I mean, when you're in college, you do things, but I haven't done anything. No.
Steven used to be a pothead, bro. People don't know Steven's past, bro.
I gotta tell you, I am very upset that I did not look at my eBay and I got outbid on some baseball cards. Very upset.
Oh, so you're into NFTs, basically.
No.
NFTs V1.
Baseball cards are not NFTs, sir.
Baseball cards are worse than NFTs.
Yeah.
If you haven't paid attention to the baseball card market, it's crazy.
It's just speculative. It's not. There's no real value there. There's nothing serious.
Oh my god!
It's like a physical picture. Like, why are you paying for that shit?
Seriously?
Yes, I'm serious. It's literally a picture of a guy holding a bat. Like,
it's as close to an NFT as possible, except you can damage it.
And there's not blockchain verified, so like if you lose it, you're sucks.
You can fake it so easy, like anyone.
You realize that Fanatics, Michael Rubin bought Topps for $500 million, and they're looking to grow the space by 10x in the next 5 years, I believe.
I love Michael Rubin. I'm just saying, you're playing.
This is a huge industry,
dude. Honestly, I think like after in 10 or 20 years, when the boomer population is no longer like a huge part of the consumer market, I just don't know where the Gen Zs are going to care about baseball, like as a national pastime.
Okay, what about NBA or football?
Sure, yeah. I mean, whatever the sport du jour is, I'm just saying it's not going to be baseball.
No,
it's going to be Pokemon cards because there's a nostalgia aspect with
I do have some sealed boxes of Pokemon and Magic cards. Got to diversify, you know what I mean?
Speaking of, one of the questions that we have is, do you guys play video games at all?
I was a crackhead with World of Warcraft for a long time.
Oh, wow.
I ran a 70 or 80 person build for like 2 years.
Wow.
Yeah, I'll tell you, it was a lot of work.
I don't play video games, but when I did, Grand Theft Auto was like my favorite, but I don't play anymore.
Tanner?
Yeah, I played like everything. Yeah, everything.
I don't play very often, but whenever there's a new game that I want to binge, I just like binge it for a week and then stop playing for 2 months until a new game comes out. What I really loved was The Last of Us Part 2 and Ghosts of Tsushima were fantastic games, both on PlayStation.
Yeah, I never had a PlayStation, so I never played any of those.
5?
Yeah, but GTA, I mean, there's another GTA coming out very soon.
I know. I have a 49-inch curved monitor, so I'm ready for when it comes out.
God. That's going to be great. Yeah.
Isn't there a female
really
cast for that or something? And it got leaked on some demo, and everyone got mad that it looked identical to the first game or to the fourth game, whatever it is, fifth.
I haven't really looked at anything.
It got leaked. They were pissed because it's been like what 12 years in the making or something ridiculous.
It's been a long time. They've done a lot of upgrades to 5.
Yo, I just had a crazy idea.
Mhm.
Why'd you laugh, Tevis, when I said that?
I mean, I'm just gonna say, can you please say it off stream? I'm scared, man. I don't know what's gonna come out of your mouth next.
Why are you
but-
always so scared of what's gonna come out of my mouth? Like, I feel like you have a hesitancy towards what I'm gonna
What were
say.
you gonna say?
Dude, half the shit you say is like golden showers or something related to that. And
Demonetized.
Yo, Anthony Noto, come bless us with your presence.
Yo, Anthony.
First of all, I think Anthony is way likely to respond by saying "Yo, Anthony" versus being like, "Mr. Noto, can you please come on?" Like,
All right, so we'll see. You DM'd him saying, "Yo, Anthony Noto, come on the podcast," and then Steven over here wrote him an email like an actual adult. So we'll see.
Steven, did you get a response?
See which one.
There's no response yet.
Okay, so both of us are 0 for 1. I took less time to do it.
What were you gonna say, Amit? Please enlighten us.
I was gonna say, you know what's crazier than a 3-hour stream?
This is going to go to 1 a.m. Let's do
4
it.
hour stream.
Let's do it.
Remember that scene in The Social Network where Justin Timberlake is like, you know what's crazier than 100 million?
A billion.
Billion.
My
Bro,
first
that shit
meeting's
was
at noon
iconic.
tomorrow, so I'm good.
Yeah, and then turns out like a couple of years later, it's 100 billion. What?
Bro, Peter Thiel investing 500K in 2005, like to have the vision to put that money into Mark was just like amazing. It was remarkable.
That was a good movie. I enjoyed it.
I think I've seen it like 10 times, bro. It's a great movie.
All right. What do you guys
Do any
think
of you
about
gamble?
all these influencers being sued?
I
For
told you that was going
FTX
to happen.
and-
Did I not tell you that was going to happen?
I don't know.
I told you when we did one of your podcasts that was going to happen.
I'll have to go back and see.
You just don't want to admit it. I can't believe it.
Dude, I did not argue against that point, so I have nothing to
but
lose. I just
all
don't
I'm saying
remember.
is I told you that was going to happen.
Bro, okay, so let me ask you guys a question. If FTX was offering you 50K a month, would you have taken it when it
Nope.
at the time
Nope.
when no one thought they were going under?
Dude, the
No.
answer is yes.
Yeah,
100.
I don't know what
everyone
you
would.
mean,
You
no.
thought it.
I make $100 a month off YouTube. Like, give me that money, man. I don't care.
No.
Bro,
It's not even about
50K
that.
a
It
month
was.
is different, bro.
It
That's
was a reputable company until it wasn't. How could you have known otherwise?
Right.
What are you also sleeping with Caroline? What are you talking about? You didn't know.
crazy. Yo, the fact that they were sleeping together, bro, Caroline and Sam. Like, no, we could talk about it, bro. There's 60 people
Who
here.
plays
This is the time to
Sam
talk.
in the movie?
What's his name? Jonah Hill.
That's what I was going to say. Jonah Hill definitely has to play him.
Yo,
I
you
remember
guys know-
that the deja vu I'm getting right now of that exact question and then Tevis answering that exact answer.
Guess how much Jonah Hill got paid for doing The Wolf of Wall Street?
A lot.
Oh, he was phenomenal in that movie.
Guess how much he got paid? Tevis, what's your guess?
I heard it wasn't a lot.
Tanner, you fucking ruined it, you piece of shit.
He didn't get paid a lot.
No, he made
Uh,
like
No, all
peanuts.
right, just guess.
500K.
Okay, Steven, guess.
I have no.
I
Clue.
have no idea.
63 grand.
Stop it.
Yeah,
he
but
got paid-
probably
he
got
got-
a huge
guessing.
back
No,
end
he
on
got
it.
so because he wanted the exposure, he took 75K to do the job.
Dude, I'm close.
Look at how big this sports car convention is.
This is
Bro,
why
no one gives a fuck about sports cars.
It's huge.
This guy, actually Gary Vee spoke at a sports cars convention, so I
Yeah,
know
he was
sports
at the
cars.
National in Atlantic City.
Oh my god.
Steven, why do
Yo,
you have so many
did
tabs
anyone
open,
notice?
bro?
Did anyone notice that Stephen Fiorillo was using Bing? I'm just saying, like that is it's
Stop it.
Google is
You're
going
using
down.
Bing, bro. What the fuck?
He uses Edge. He says the best stock to buy right now is Google. I just saw him use Bing.
No, actually,
No.
I'm using Internet Explorer. Dude, a Bing. I don't have Bing.
Next thing
Hold
you know,
on.
we're gonna see fucking Wells Fargo, Bank of America. You have posters
Yeah.
of JP Morgan and Jamie Dimon on the fucking wall.
The price to free cash flow makes a lot of sense now.
Hold on. So I'm sharing my screen. That's Internet Explorer.
You're not.
Right
You
there.
can't see it.
Internet
shit.
Explorer.
Stop it.
Yeah, which is owned by. Do you see the big B in the top right hand corner for Bing?
But that doesn't mean I'm using Bing. I use
Okay, but it's
Google
still
as my search
Microsoft.
engine.
Google has its own product, and you're not using it.
That's
You're
true. You're
right,
not
I
using
don't.
Chrome. Why aren't you using Chrome?
Why am I not using Chrome? I don't know, because I didn't fucking install Chrome.
How do you not have Chrome on your computer? That's like the A standard. You
Oh.
fucking
You
We
probably
roasted
Did he
it
just
too
accidentally.
rage
much.
quit?
I think you might have accidentally clicked out.
He definitely pressed the X button. He was trying to exit out of Bing. and he
Yeah,
exited
dude, that
out
is
of
so funny.
everything.
Fine, you want me to use Chrome? Midstream uses Chrome.
He's just joined
I
back.
hit the wrong button.
Dude, that is the best clip. Please
Oh my
clip that.
God.
I hit the wrong button.
That whole saga of using Internet Explorer to Chrome, him obviously going, okay, I'm going to switch to Chrome right now.
No, you trying to exit out of Bing and then you just pressed X on everything. He was like, oh.
No, I went to stop sharing screen. I must have hit leave the fucking thing. But yeah, no, I don't know. I don't have fucking Chrome on this. What can tell
I don't
you?
get how you don't have Chrome. It's like it's on 3.2 billion devices and you're one.
Yeah,
of
I
them.
don't have it on my main computer either. I have Internet Explorer.
Wow, that's weird, bro. Chrome's just faster and all that shit.
So you guys want to hear something funny? So I have my YouTube creator dashboard on one side, and I was just like periodically through the stream, like refreshing, just seeing like if I make it past 5,000. And I made it to 5,008. I just refreshed, and I lost 2 people in the last 20 minutes. So clearly, the moment that Amit and Tanner stepped on to talk about their shit,
Those 2 people were me and Tanner.
All right, guys.
Both
bro.
were.
Oh,
I-
Amit, do boomers use Secret Lab chairs, by the way? No, they don't. I'm not a boomer.
That's true. That's true.
I'm not a boomer.
But they also don't eat cookies and milk before on a Friday
Dude,
night. Like,
cookies and milk.
bro,
are
you sent me the fucking picture of a cookie. I'm like, is this guy like putting cookies out for Santa Claus or something? Like, what the fuck is going
No,
on?
like sometimes you just need to have a nice glass of milk with some cookies.
Dude, knowing what I know about Steven now with his Secret Labs chair and everything, you're going to see his car keys. He's going to have an Alliance keychain on it for his.
What's a
You-
line?
What?
What do you mean Alliance?
Were you Horde?
You mean like you mean fucking World of War? No, I haven't played World of Warcraft in a long time. And even
Yeah,
when I
you were
did,
Alliance.
I didn't do anything like that. And I played both factions.
Okay, so let's ask the real questions. Steven, what's your net
PvP
worth?
for Horde and then PvE on Alliance.
Steven, what's your net worth?
No comment.
Amit.
Wait, what was the question?
What's your net worth?
The IRA has joined the chat.
We're waiting,
considering
bro,
it.
for the answer. Just liquidate
Oh,
all
you're
your
gonna
shit
be
in your
waiting
head.
for a long fucking
Is it
time.
over $1 million?
You're gonna
Dude,
be
just the
waiting
2
a
apartments
long-
alone.
Is it
Amit.
over $1 million? Are
You're gonna be waiting a long fucking time.
Amit, man?
Like, he invests in dividend stocks and he owns 2 apartments in New York City. What the fuck do you think?
I mean, I'm just asking. You never know. People might be broke and
That's-
be like, there's different ways. I don't know. I know Seeking Alpha is already like fucking $1 million fucking net worth for him. So,
Dude, I wish.
yo, if they went public,
I
would you
wish
buy
we
their
just
stock?
all stayed silent after that.
Would you buy Seeking Alpha stock if they went public?
I'd have
Are
to see
they-
the financials.
Yeah, what's your price to free cash flow?
Yeah, I mean, they-
What's their article to
obviously
free
the
cash
money
flow?
comes in every month. I mean, I don't know. Can't just buy it on a name.
My boy Casey Kent Ho is still here.
Steven, blink once if this is correct.
I'm not. No, I'm not going to tell you. So don't ask.
He's blinking like
Wait,
crazy.
why are people so taboo about this? I don't get it. Like, I'll
Because
say
you know
mine
why?
right
Because
now.
their
I don't care.
family and friends and the IRS and everyone is watching.
Bro, you can't
They're
lie to the
taboo because they
IRS,
have a
like,
high
so-
number, Amit. Like,
But so if you have a high number, you should be fucking. This is America. You should be proud of that shit. Like,
Yeah, until your family wants you to fly them out and stuff, and
and then you tell respectfully, you're like, no, fuck you.
oh,
Work
dinner's
harder.
on you, and then they get resentful, and there's a whole bunch of reasons why people stay. It was like my
The
biggest.
NASDAQ is going up right now, up 90 points on the futures.
it's because we've been streaming for 3 hours.
It was like my biggest point against crypto was like You don't like. There's a lot of privacy to financials, and you don't just want everyone to see what you have in your wallet. I think it's such a stupid like idea. It was the biggest part that
Speaking of crypto, Coinbase slid 14%. What happened?
I know.
They got sued, bro, by the SEC. Well, they're not
Yeah.
getting sued yet, but they got a Wells
Was
notice.
Gensler after them right now?
Yeah.
What did they do?
This was actually, I mean, this is the point that if like America feels crypto is gonna be a threat, they'll just fucking ban them like China. And that's not what's happening, but it looks like to the outsider if that's what's happening.
Here's the thing is, I guess if you're a Bitcoin maxi or whatever, is that like you can ban a lot of these exchanges, but also you don't need a local exchange to buy your crypto. There just needs to be one. And
No,
an
but
internet
Tanner,
connection.
no one knows how to buy Bitcoin without Coinbase. Like no average person.
No, I'm aware. I'm just saying for the maximalist, the idea would be is that once you get it off the exchange and onto a private wallet, nobody is stopping that.
Yeah, but the problem is there's not enough maximalists for the price to increase because like people need a basic exchange to do it, right? They need a UI.
Did I have to tell you the biggest mistake of my life?
Not.
Please
Okay,
do.
never mind. Yeah, go ahead. What is it?
So back in 2011 or 2012, one of the guys in the IT department and he stumbled on this thing called Bitcoin. And we were talking about building a mining computer and mining it. And my wife was like, just take $1,000 and just buy Bitcoin.
That's pretty supportive.
Were you asking for the price to free cash flow?
No, but
It
hold on.
was.
Bitcoin was at like $6.50. And I did not buy it because I couldn't figure out how.
Wait, so let's do the math. If you put $1,000 divided by 650 times 28,000, you would have had 4.3 million today.
Wouldn't have made a dent.
Seeking Alpha alone covers that.
Yeah. All right, guys, I really got to get to bed.
All right, I think we can all wrap it up. It's past midnight. 3 hours. Admit, what is your net worth, mofo? How about
My net worth is.
Don't ask those questions.
I mean, I can say it if you want. I don't really care.
No,
Yeah.
don't fucking.
Adding up everyone's investments of 300 and something thousand.
No, I don't. I mean, that's not part of mine. I don't calculate that at all because that could go to zero. That could go to the moon. Who knows, right? So that's why I don't.
It could go straight into his pocket, and
it's about like 100K for me. It's about 100K. So
I will see you guys another time, definitely on the SoFi Weekly.
Steven, thank you for hopping on, and also Tanner and Amit, thank you for hopping on. Over 3 hour live stream, 3 hours and 7 minutes.
We gotta figure out a time to go break the record. Go for 4.
Yeah, no, I'm absolutely down for that. If
no, he's not.
All right, yeah, bye.
If we start earlier, all right.
See, I told you, Tanner shook. He gets tired. He's
Steven,
shook.
next time I invite you, I need this energy, bro. I need it.
Yeah, seriously. The past couple of weeks, I've been working Friday nights hard. My weekend's been shot. I've been working a lot Friday, Saturdays to write articles.
All right, everybody. Have a good night. One day, Nate, we will hit a 4 hour live stream. Thanks for watching. Like, subscribe below. Check out Steven at DividendStreams on Twitter and look at his articles on Seeking Alpha. And that is it. I'm ending the broadcast now. Bye.
Good night.